Good morning. Always a pleasure to have you here. What's kind of the baseline explanation for how things have been beating expectations still to this point?
Yeah, it has been pretty incredible. We've put together a really mighty string of economic beats. If you look at things like economic surprises, they've been in positive territory for some time, which just says that economic data continues to surprise to the upside. We think that there's a few drivers of this, one being the fact that we are running a pretty meaningful fiscal deficit in an environment where the economy is strong, meaning that you are providing fiscal support at a time when we're not in a crisis. At the same time, is that you have some resilience because of the way that balance sheets are structured within the economy. If you think about a whole decade and a half of QE, really allowed companies to term out their debt, making them less sensitive to short-term interest rate increases. So when you roll it all together, what you have is an economy that has not really felt the pinch of this much higher interest rates. There are certainly some signs of cooling, signs of things starting to moderate, but we're really just moderating back to trend. We haven't yet hit the point yet where things have fallen off a cliff that would say recession is imminent, recession is a concern, which is why we think that there's been this floor under yields as we think about how the bond market has traded all this year.
Coming into this year, there was a lot of concern that the next phase of our economy was going to be a deep recession, that credit risk would be a bigger problem than inflation risk. Has that calculus changed a little bit in your mind with that floor under yields you mentioned?
Yeah, I mean, because if you think where there hasn't been a floor under is credit spreads, they've continued to come in this year, signaling that the credit markets are not concerned of a sharp deterioration in the health of the businesses that they're lending to, which is typically supportive of better equity markets, given the fact that credit and equity are very tied. And I think that part of this is because of supply and demand. One of the things that we've seen is that as interest rates have risen, companies have been less willing to do big financings and have been kind of holding back on bond issuance. But at the same time, even as we have seen bond issuance start to tick up this summer, you've still seen those credit spreads coming in, which is effectively the bond market in the credit side of things, signaling a signal that they're not concerned yet, that they're seeing the whites of the eyes of a much weaker economy and thus much weaker company fundamentals. The one thing to watch, though, is we are seeing delinquencies pick up, and we are starting to see some signs of stress in those lower quality credits. So I think that's an early sign that maybe this benign environment that we've been in of falling credit spreads may be starting to nearing an end if we're starting to see some of the weaker credits have some issues.
We were just looking at a chart there of bank loan growth on an annual basis. First, the Fed funds rate. If we pull that up just again for a moment, blue line being the funds rate, and this post-COVID rebound of loan growth stalling out a little bit. But I guess it's only recessionary if it takes an even deeper dive.
Yeah, I think that is clearly the case that history would suggest, is that bank loan growth and credit growth usually is a lagging indicator, meaning it responds to weak data. It doesn't necessarily lead weak data. But there is another kind of very interesting aspect to all of this, which is that you typically see loan growth accelerate as the Fed is raising interest rates. And that seems a little illogical. Why would people borrow more money when the cost of money is more expensive? There's a few reasons for that. The first one is that the Fed is usually raising interest rates because the economy is stronger and because they're seeing signs of better demand for things like credit and underlying growth dynamics. But the other reason is that as the Fed raises interest rates, banks want to lend more money. They make more money when interest rates are higher. Why wouldn't they want to lend for a longer term when interest rates are 4% versus 2%, for example? So what typically happens is that you reach a point in the cycle where you start to see loan growth really start to decelerate because of some kind of catalyst. That appears to be right now the catalyst of SVB and the other regional bank issues. The question is, does it continue? And does it continue to a deep enough pace that it coincides with a recession, as we saw in prior cycles? That still remains to be seen as we start to see some stabilization in the regional banking data.
The earnings season seemed to have been a bit of relief on that front for banks. But then you get this note yesterday from Moody's, and there's a little bit of a scare in the sector again for banks. Though yesterday, actually, the regionals ended up in better condition than a lot of the tech stuff did. But not to get too off track here with that, the logic between what the Fed has done and how the economy has responded. As you mentioned, some of these things might surprise us. One of the other ones that I think is somewhat surprising is that the corporate interest costs are plotted next to the Fed funds rate. Another pretty good explanation that comes back to why we've been so resilient. How does this work? How did those costs go lower even as the Fed funds rate is going up?
Yeah, it is pretty incredible that as we compare interest costs to profits, that you're actually making new lows. And if you look at the growth of interest costs as well, they've completely diverged from the path of Fed interest rates, which is really rare. And we think the reason why we're seeing such a different path for interest costs this cycle versus prior cycles is because of over a decade of quantitative easing. QE allowed corporations to extend their maturity of their borrowings, meaning that because the Fed suppressed interest rates all along the curve in those longer maturities, the end result is that corporations could essentially immunize their balance sheets to rising interest rates. An interesting stat is that if you look at commercial paper as a percentage of total borrowings, what you can see is that it's actually a tenth of what it was prior to the great financial crisis.
Good morning. It is August 9th. We're going to be streaming live stocks, options, futures trading today. Watching the SPY, Dish, RAD, GNS, Mullen, whatever. Looking at some TA. Sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at Happy Money YT, as well as our Discord server link for those that are in the description. I'll put a Discord link in chat as well. We got a couple gap ups. GNS looks like it's up 6.5. Market just opened. SPY is giving up some of its pre-market gains. Alright, looks like Dish had a gap up of 2.8. RAD is flat. SPY is just hanging on to its green. Looks like it's going to fill that gap. Nirvana had a gap up for some reason. They like changed their guidance or something. That's GNS. GNS Group announces a record date for spinoff or full share recount of its shares for the purpose of the distribution. It's August 31st. Well, there you go. Go GNS. Nice engulfing candle yesterday on it. Taking that gas had a bit of a rally. Okay, we're gonna get back up to some levels maybe. SPY is now red. Barbecue's flat, 24.80. That's 11.25 on that. %, on GNS. Got IronNet up. IronNet had a big gap down yesterday. PGN's up a little bit. Base is up 4.5. Flat. They could be very slow and choppy with all being all of our data. I think RAD's gonna make us proud. It gets ready to break that resistance. Just for that $4. Celsius? Is this the energy drink? They had earnings. Yeah, they had earnings. Loop TV is up 16. Got Dutch Bros. Ends up a bunch. I think Portnoy or whatever is back in with them. I think that was the news on 10. Nice little move on Bros. Resistance here for Dish. See if we can hold above there. Morning, Tasty. Clove is up. GNS almost 12%. Good morning, Bubblicious. You long on GER. 12% on GER. Nice little gap up again. Barbecue's down 2.8. He's down half. RAD is up 1.8. Buy back to RAD. Morning, Lords. You say it's Barbecue is pink limited now? Did they downgrade it or delist it or whatever? I guess that's why they're not able to buy it in Europe anymore. It is on 5-minute. There, we got some extended hours. .7 on RAD. Dish is coming down there a little bit. GNS up 8. Now it's in that upper resistance. It needs to break. Where does that even come in from? Oh, that one. Yeah. The downgrade. Crazy. Yeah, no, I didn't hear about that. Well, does that mean we're not able to buy it? Well, they're definitely good at filing. They're always filing stuff. They go file crazy. AP is flat. Got run up 0.5%. I'll knock down 1.5. Come on, Telly. Understood. Yeah, I mean, those a lot of those people don't trade OTC. GNS giving it back a little bit. All right, RAD. RAD's gonna do it today, I think. I see new high there. Dish kind of sold off that pre-market. A pre-market gap up. We got a price target cut by Credit Suisse. What do you think you are, Credit Suisse, giving people price target cuts? So over leveraged, you don't even exist. But look at from 30 to 27. We got 2 price target cuts. Both of them are in the double digits. Over 2x from where we are. Is that why stock's coming down? Probably. I come down a little bit more. I didn't leave yesterday. Man, I should just maybe set up a stop instead of a trailing stop. Too tight. Ended up making that full cup. Full cup, little handle, and then the breakout. Would have been a 150%. But I was happy to see that it was the right play anyways. Though I didn't profit on it. GNS. Trying to create good habits. This can be sustainable. One day doesn't matter. What did I just see? I thought I saw RAD. RAD 2.5 there. Thought I saw you. Peak Limited has an option of pink guidelines disclosure rules, so it could be a different reason than delinquent filing. Which barbecue is not. Nothing's cooking. You're going dark. That's an interesting thought. Morning, Guts. Buy the day before it goes defunct, new expert. Yeah, because we won't be able to buy it after that, right? I mean, most retail will be locked out of it. % on GNS. Same to you, Guts. Appreciate it, man. Do we know the day it's going to go? Will we know before it goes to new expert or whatever? Doesn't seem like they give you a heads up for that kind of thing. Hey, David. Above 26 for end of year? Maybe. It's just, I would say yes if it's broken above this resistance. If we fall this way, I don't know if it'll make a bottom and then make it up above 26 before end of year. Less likely, I'd say. But they do have potential acquisition coming, which could pump it up. So without news, I'd just like to see it break that resistance. Then I'd say yeah, but undecided still on that one. Hasn't decided its direction to me. Apron's up almost 6. GNS 9. RAD 3% now. Ish, little bounce there. Getting power is peeling due to link filing. I don't know. I didn't even know it was it got downgraded. So yeah, maybe like you said, their financials are not many of them because of secrecy. It does seem strange because they're very adamant about releasing dockets all the time and keeping up, it seems like. Eyes coming down there more. Oh, good notice. Nice. You ever seen a stock go limited like this? How is it normally different? Wouldn't a downgrade on a OTC stock be kind of normal? Proterra is up. Oh, big gap down on that one with earnings. Never mind, they filed Chapter 11. Do we have We're just looking at Proterra? Oh, I had shares of this one at one point. I sold them. That's right. Holy smokes. Filed Chapter 11. Peace out. I didn't even know what it was. EB? Gotta know to get puts on that thing. Yeah, I had shares of this for this move. Probably be a good short. Barbecue down 1.4. I'm moving back up to BWAP here. You're wondering why it's getting downgraded when they not a delinquent filer. GNS hanging out there, 8.25. RAD kind of gave back some of those gains back to VWAP. Dish bounced back up to VWAP. Obvious, but can't prove it. Morning, Emperor. Hey, man. ETOO is up. ETOO at a 4.5. About TUP. Haven't checked TUP yet. Down 2.6. Still some nice consolidation. Yeah, that's interesting, Lords. Thanks for sharing that. And yeah, good to know that. Probably want to get exposure on it before you can't. If they give some kind of deadline or warning. I wanted such exposure. Is he or ride or die? We don't know if it's with RC. He's coming down some more here. Got neg. Neg's up 0.5%. Run is up 2.8. Got puts on Carvana yesterday, unfortunately. And they had good news. RAD's up 0.5. Peloton's down 1.7. Dish is hanging around flat. Did gap up and open above that resistance. A little taste what it's like up there. Goes down 1.25. SPY about to make a new low. GNS 9.7 green. GME is down 1.4. Still hanging above this level. IP is up 1.17. That is neat. Runs up 2.25. Nice little bounce on that trend. Like it's holding that. Charge point up 0.8%. Inverse head and shoulders is still holding on there for charge point. Hey, barbecue's green. 2.7. RAD. Back to break even. Dish is down almost 1% now. Carrying Frodo to Mount Mordor. No, so far I'm just a spectator, Lords. He needs our help. He's there as an interested party. Which is not conclusive at all to me that as a shareholder at this price on barbecue, it will yield a big return. Bros. 23% and holding. Holding strong. Up. Coming up a little bit. Mullen's down 5. JH is still buying Mullen. GNS is holding pretty well. September, you're gonna run for second place, Emperor? Nice. Way to have manageable expectations. Bounce there in UWMC. Oh, why did it sell off before earnings? Well, that volume on Penn yesterday also. Sounds pretty delicious, bubblicious. % on GNS. That is down almost 2% now. Nice consolidation on it though. I just kind of hanging out at the lows, still below VWAP. Good break on VWAP for SPY. Might be bullish. RAD is down 2 now. Give me a little bounce, up 0.5%. Moved up with SPY there some. Rose is looking strong. ETOO is ripping. 10%, 11%. 1.5% on TTO. Rally. Well, that move up on nat gas was kind of above this range it's been in. Impressive. Maybe a good short. Back into the range you go. Barbecue 2.78 still. Got run up 3.5. Pretty solid bounce there on that inverse head and shoulders and that trend line. .3 on run. Got apron up 12%. The report. Nice. About 20% of its workforce. Missed on EPS. Missed on revenue, on sales. I guess they like the guidance or something. Turn is up 12% with that. Highs coming back down here. Almost 11% on GNS. Yeah, TTO is still going. 14% there. Apron also. Being 17% on apron. Still some puts on Palantir. Nice. Down 4%. Well done. Glad I closed my Island Boys play. On Apple, Disney, and AMC. UNG puts it open, that might not be a bad play. Probably working out. How much time to get on your PayPal? Dude, that IV is so low. Crazy. Golfing candle setting up here on the 5-minute. See, those I've just been very choppy this morning. $12.5% on GNS there. Starting to peek through that resistance. $0.82. Gonna be that next resistance. RAD now down 3.5. Might want more RAD calls. I'm liking this consolidation up here. $14 on GNS. I think I'm still down on my shares. Yeah, just a little bit. IEP up 2.3. GNS starting to rip a bit. 17.5% just broke out of that range. $0.75. See if we can make it to 82. BBBYQ. Expert market. Barbecue hanging out, 2% up. We'll break out there on GNS. $9.15.65 call, 70 call. Okay, so not a whole lot of time. Nope, I think, was it you? Someone was getting leaps on PayPal. GNS options kind of suck. They just added them, I mean, a few months ago. Not a whole lot of liquidity on these things. Pretty wide spreads. Darkwing Duck. Let's get nuts. We got GNS. Break it. Boy, undecided. RAD's now down 3.9. See if it's a repeat of yesterday. Get a bounce on 0.4. It's just hanging out up there, pretty flat. Almost 18% on GNS there. We started to lay some money. Yeah. I mean, just, yeah. I like to do both. I have some stuff I'm not actively trying to trade. You can get big percentage gainers on leaps. Just sit there and marinate and get deep in the money. Here we go, GNS 21%. Different data gain does roll deep and hard. Alright, let's see if SPY can break out here. green on my shares. Yep, that's about where I bought them. That was that accidental buy. I didn't accidentally buy it. I put the order in. It didn't show me that it filled. And then like 10 minutes later I realized I bought it. This is the way. Whew. Rose is up there, bro. Barbecue up 2%. Big gap down on Upstart. That from earnings? Dang, dude. Thought about the puts also. Didn't pull the put trigger. Wow, those have been nice. Then I got Carvana puts. Oh, look at that. Carvana's down 2.5 now. Wow. My boy. Won't do it, SPY. Room is down 30%. Is that on their earnings? This Carvana play works out. Upstart went down way faster than it went up. That is the fun thing about puts. You can really get some good velocity with them. Roblox must have had earnings also. 20% gap down on Roblox. Fresh is down 10. Nicola down 10. Vivian down 7. All the EVs are taking dumps. This range on the SPY. Let's see. Laser. Laser's down 7. Mullen's down 6. Turbo's down 5.8. GNS red candled back to VWAP. RAD still down 3.9. This break on SPY is going to be aggressive, I think. All this liquidity we built up right here. Boom! It looks like it's going to be the downside, but I don't know. There's a bounce on GNS. Holding a nice level. Down 1.3. Barbecue came back down 25 cents, up 0.81. MF. Yeah, it's kind of that support we had from back here on that bull flag on MF. I like to see it bounce on there, or it's not looking very good. %, on apron. eBet's up 37%. Get that trash. A lot of volume today. 298 million? Well, it's only 40 million? Oh, is that because of Penn? The volume today is crazy. Happening. SPY back up to VWAP. See here. GNS hanging out above VWAP. SPY breaking VWAP there. The upside. Up is flat. And market really doesn't care today. RAD down 4.25 now. If I can get some more calls. GNS bounce on VWAP. Dish is pretty much flat. Closed out of those. Oh, you guys didn't know. I had some dailies open. It's just consolidating though. Gonna wait for a breakout. One way or the other. GME flush in there a little bit. Down 1.9. GNS back near the highs. That. Yeah, GME retested that support. Heparin 9.3 kind of came down a little bit. Look at this guy.
Cognitive decline, memory loss. There is a tremendous amount of side effects that comes with plant-based THC. So using our technology, we remove those side effects. And why is that so important? You know, today cannabis is being used by over 50 million Americans.
Oh, now
35 million Americans who use cannabis a month. In 2022, cannabis sales exceeded chocolate and they exceeded beer sales. Dr. Gupta actually on a CNN documentary recently stated that the growing users in the cannabis space are actually senior citizens who are tired of taking so many different prescription drugs. So we are providing a solution for an unmet need for people who want to have the anxiety relief, the pain relief, not have the cognitive impairment,
GNS at the highs,
but use a safe alternative, which potentially could be available by a prescription drug. Imagine this, you're a 65-year-old adult who is using cannabis and it's impairing your cognition. I mean, the risk factors are actually tremendous. I mean, people can fall, people can trip, they can get into an accident. So our drug in preclinical studies actually shows not only does it not impair your cognition, it actually enhances your cognition. So we set out to provide a treatment for patients who are looking for anxiety relief, for pain relief, while enhancing their cognition. So we're very excited about this new cannabinoid that we're working on bringing to market.
A lot of labels on CBD products argue that they're doing something similar. Is that bogus?
That's bogus. When it comes to the plant-based drugs, it's very difficult to say, hey, I'm eliminating the side effects, or hey, I'm increasing your cognition. The only way to do that is through a pure pharmaceutical play, and that's exactly what we're doing. There was a poster that was presented at by Johns Hopkins Medical School at the 2023 ASAM conference, and the poster title was, unlike marijuana, unlike THC, enhances your cognition. So the preclinical studies over there showed that we don't have the side effects, but we have all the positive effects of THC. So we're very excited about this drug, and we believe it's going to be very welcomed into the medical community as well as the general population as a whole. So there is a real unmet need, and we're very, very excited to bring this product to market.
What type of studies have you done so far, and where are you in the trial process? I know your preclinical is technically the label of the business right now. Can you tell us a little bit about what you've done so far and what the most next immediate steps are?
Of course, yes. Like you mentioned, we are a preclinical company. We've proven the concept that we set out for the drug to do. Currently, we're doing our toxicology work, and we're gearing up for a new drug application. So we're going after an unmet need in early-stage dementia patients who are experiencing anxiety and cognitive impairment. You know, a lot of times when you're experiencing a dementia, you're having some sort of a memory loss and you're forgetting things. That brings on a certain amount of anxiety as well. But what is the option today? So if you're a patient who is suffering from anxiety, the only real option today as a first-line treatment is a class of drugs known as benzos. Some of the benzos out there are like Xanax, Klonopin. But what do these anti-anxiety drugs do? They actually impair your
It's slow, and
cognition.
they've got this guy just
So
going
they're
on.
not benefiting the dementia patients. They're not benefiting the elderly population or the younger kids who are using marijuana and pot that are having their IQ decreased. There have been many studies to show that. So we're having a viable option here that will help treat these early-stage dementia patients. It'll treat their anxiety while helping them with their cognition, enhancing their cognition. So we're very, very excited about this. I mean,
Bummed I missed that
we have
upstart
two
short.
ways of addressing this market, right? I mean, the marijuana market.
Maybe on a bounce I'll get it.
It's blowing up. It's going to reach $48 billion by 2027.
Look at the market, man. This is crazy.
The neuropathic market is a 90+ billion total addressable market. Anxiety, chronic pain. The solutions today are benzos and opioids that are extremely addictive and harmful for long-term use. So we're so excited about bringing a product. I mean, cannabis has been around for millennia. They're fairly safe. So by us removing the side effects and allowing a prescription-based drug that people can have the comfort level of their doctor and the FDA's regulatory scrutiny over it, to be able to feel comfortable being able to use a drug that can help them with their pain, help them with their anxiety, but also not impair their cognition. So we're so excited about this, and we really feel that there's a large market, and the market will accept this as an alternative to what's currently being prescribed to them.
It's a very compelling argument. Just real fast, Erez, why the IPO? Do you need the cash injection? Or why not just get grants for research, stay private, and not have to answer to the market every quarter?
Fair question. We wanted to, our
Always
focus
for the money.
is 100% on the development of the drug. We're focused to get this through the FDA in a phase 1, phase 2. We did this IPO because we wanted people to get behind this because it's a tremendous story, and we wanted to give people hope to really understand and realize that there are pharmaceutical companies out there that care about patient treatments, that care about patient outcomes. And we're very passionate about our commitment to help the Americans and people around the world have an alternative drug that can help them get rid of some of the other drugs that are in their medicine cabinet to be used effectively and safely. And I mean, this is just something so exciting, and we're very excited to share this with the world and partner up with NASDAQ to be able to get our story out there.
Absolutely. Okay, so raising some awareness along with the capital important to the process. Certainly a very compelling point here, especially given the huge uptake in marijuana use over the last several years here, and trying to strip out some of the negative effects can be very powerful. So definitely a compelling message. We'll get into the science more. Would like to hear more about that from your team next time. Erez, thanks for giving us the introduction. Erez Aminoff, CEO at Mira Pharmaceutical. All right, coming back, Chartmaster, a couple stocks to think about for earnings this afternoon.
The guy just seems super high. The slowest interview I've ever seen. Okay. Yeah, market's undecided. And might kind of stay in a pretty tight range until CPI and everything. Kind of set a floor down here, the ceiling up here. You're in a hemp seed oil Epsom salt bath right now? Pretty intimate stock stream you got going on. Yeah, Finger's up 3.8. Not bad. I really like this chart. Should have sold credit spreads. Iron condors or something on the SPY. It's crazy. I don't know what's going on with eBet. 313 million volume today. Got 40 million in its float. By far the most volume this thing has ever seen. The volume's been increasing as it's been getting dumped, so lots of selling. And today, RAD's down 5.3. This is back to green, or still green, I guess, over VWAP. Size range is getting even tighter. I'm gonna just play the puts up here and close them here. Not really worth the risk versus reward. Intimate more medicinal. It's intimate with me in your bathtub, Bubblicious. And your name's Bubblicious. And I'm playing Yaz. GNS is holding up really well up there. 18%. Okay, SPY coming down a little bit. Let's see if we can get another retest. Oh, breaking. I'm gonna close one here. Close another one. See if it breaks through. I don't think it will, but yeah, close the other two. Whee! Then I'll stop playing stupid and wait. RAD's down almost 5. Dang it, there's the flush. Step away. I want to hold those puts to the top of the range. Alright, new low there on SPY. Now we're getting some action at least. GME's coming down a bit with it. GME down 2.3 here. GNS back to the highs. 21.5. Still seems like very low volume. Very light. RAD down 5.3. Have an order for some calls. Not sure if they'll get filled. Here's our horseman.
Up, credit problems. George, it's kind of looking like this Goldilocks narrative is running into three bears. What do you think?
Well, I think the Goldilocks narrative associated with the economy is still intact, OJ. I think what we're actually seeing, and I'm gonna mention Upstart, we're actually seeing the AI momentum trade, the parabolic one that started in May, just blow up right now. We're seeing Upstart down. If you look at super micro computers, SMCI, that's down a lot. Nvidia's down. Palantir. I'm just naming a few to go along with Upstart because it's really an AI-based credit algorithm technology firm, and so I think it's duly moving to the downside because if you look at the parabolic move since May, it's not justified. And of course, they didn't, of course, come in when it comes down to sales estimates. So I think that's what we're seeing here. We're seeing a rotation and I think a healthy correction in the marketplace. But you're seeing the cyclical rotation in
I
the
just kind of melting
inflation
down here.
areas of the market.
Looking for an
Oil, for
entry.
instance, is moving higher. Natural gas prices are rising because of
Enter on
problems in
this.
Europe, and we've got the inflation print tomorrow. And if you look at that number on a year-over-year basis, the core number at 4.8% looks like it's going to be flat consecutively from last month year-over-year. And I think if you look at CPI or headline, 3.3% consensus, that's higher than last month. So we're seeing a little bit of a stabilization of inflation. And with that said, we're seeing the markets roll over just a bit.
Okay. Crude oil, the only thing up today. Bonds aren't catching a bid. Seems like the market's pretty nervous for inflation tomorrow, Scott. What do you think?
Yeah, I think you're right. And getting, back to your Goldilocks scenario, Goldilocks was not too hot, not too cold, but just right, at least the porridge and all of the other things that we're looking at. And I think that that's an important component of what we're going to be looking at tomorrow in terms of the inflation print tomorrow with PPI, tomorrow with PPI and Friday with CPI. Yeah, these things are going to be important. We've had a lot of talk. President of Philadelphia Fed President Harker said, he's expecting things to kind of stay safe. Now, there's still some hawkish tone in some of the Fed presidents, but here he's come out and have been extremely dovish with some of his indicators, or with some of his comments, rather, yesterday at least. And so, as we move into these new indicators, or the new print on CPI, PPI, respectively, and other things as they start coming out, I think then and only then will we be able to start determine, are we too hot, are we too cold, or are we just right? But even then, we've got a big time moving target on our backs as we're making these determinations, Oliver.
Target on the back going into tomorrow's print for sure. NASDAQ down about 1%, certainly losing some of our leadership at very least. Thanks, George and Scott, for closing it out for us. As stocks are on the lows of the morning, trading 360 with Nicole Pedalades is up next. I'll see you this afternoon.
What? GME broke down through there on 2.8 now. Barbecue up 0.7. Morning, macaroon. Got home. $11 o'clock. Made it. Thanks, guys, for your likes. Appreciate it. Got 16 on the board today. Low day before CPI. GNS moving back to VWAP. Still up 16.5. RAD's down 5.5. Dish is pretty flat. LC is holding on to their 20%. See if we get a little entry on this buy here. Thanks, Cats. Appreciate it, man. Dock down 3.25. Carvana puts are up actually. I've just been waiting for like one green day on Teladoc. I guess yesterday was one. Whoops. I'm curious to see if it bounces on this breakout. Little bounce there on SPY.
6 million is well exceeded forecasts and was up 112% from last year. Now, second quarter adjusted earnings also almost doubled from what the street had been expecting and was almost 5 times what they reported last year at around 52 cents. Now, specifically when breaking down their revenue, we saw international revenue increased 76% year over year. North American revenue was up 114% also from last year. So really strong international growth, really strong domestic growth. CEO did highlight the fact that they've seen an increase in average SKUs per location, as well as accelerated club channel growth and increased sales and marketing investments. They did note they continue to further leverage their PepsiCo distribution system, which is, as a result, they ended their quarter with about $680 million in cash and cash equivalents. That was up from just $60 million a year ago. So they're not only growing on an earnings and revenue basis, they're growing in terms of the health of their overall balance sheet, which is what obviously investors like to hear. So really, really strong report out of Celsius, and just goes to show that I think utilizing PepsiCo for a lot of their supply chain has really benefited this name, which has really taken off in terms of consumer interest as well.
Yeah, and that's what he was saying. He said that that distribution with PepsiCo meant all the difference, you know, getting in all the right places and being available. And also, you know, a lot of Monster gets sold out and then people get Celsius and they love it. All right, how about Roblox? This is one's under pressure.
Yeah, almost a perfectly pinned move to in the opposite direction today out of Roblox. We're seeing shares almost down 20% on some lackluster results. They did notch a wider than expected loss when they reported their earnings, which I think is the huge reason we're seeing the selling today. Shares of Roblox are down, like I said, almost 20%, much more than the market had been pricing in. The company did post a second quarter net loss of 46 cents per share. Compare that to the 44-cent loss they reported a year ago and the 30 cents that was, or 44 cents was expected. They did post a loss of 30 cents a year ago. Bookings were around 781 million. That was up from last year, but well off analysts' forecasts. And revenue came in almost $100 million short at around 681 million, well below the expectations. They said they were able to build out some of their various plans during the quarter and enable them to generate their operating leverage against an infrastructure and also control some of their spending against the higher expenses. But all in all, this was not necessarily positive commentary from their CEO on some pretty lackluster results. So in this earnings environment, you have to be putting up pretty strong beats or pretty strong growth. Roblox was not really able to do either of those things in this report.
Understood. Good to see you. Jenny Horn, markets correspondent. Thank you. Let's get some insights in the news shaping the markets. And for that, we welcome in Dennis Polyak. And Dennis Polyak, partner, managing director of Polyak Group Wealth Management at Stewart Partners. Good to see you, Dennis. Thank you so much for being here. We had an incredible July. People were excited about the run we were having. It was record-breaking in many ways. And August is a down month. What do you think about this?
So, good morning, Nicole. Thank you for having me on. And all eyes this morning are on tomorrow's CPI report. And I guess the market's take is that we might be expecting a slightly worse than expected report. But so far, we have had some of the best market environment so far this year. And as a matter of fact, the S&P and S&P 500 is off to the best start of the year since 1997. And
GME's down 3%.
It's reasonable to expect a little bit of a pullback.
Understood. Okay, so look, I mean, a lot of profit taking happened. You've had a lot of stocks that really ran up. And what are your thoughts? You were talking about CPI and PPI. As you're waiting for this inflation print and what the Fed may or may not do, are you worried about recession? What's the big picture and what should the Fed do?
So the overall consensus several months back was that we were going to go into a recession end of this year, early next year. And because of the last month's inflation report that came in better than expected, many economists and analysts are in the camp of that maybe we will avoid the recession and we will have that soft landing that many people have been talking about or wishing for. We are in the camp of believing that we will go into a slight recession. Simply, the spending has been truly on unsustainable trajectory, and with last week's Fitch's downgrade, it's coming to a forefront. So we believe that we are heading into a mild recession, probably end of this year or early next year, and that's our thought.
So with that, having some concerns in that matter and thinking about somewhat of a slowdown, what's your advice to investors?
Advice has been very much consistent. Please take a look at your individual and personal goals, risk tolerance, time horizons. Make sure you stay true to your overall asset allocation and be diversified. This year's market has been very narrow, and if you take a look at it was really everyone is talking about the 7 companies.
I think GME is just coming down with the market here.
For pretty much all of the Nasdaq returns in S&P 500 returns.
AMC earnings were yesterday also.
Just as we are heading into what we expect to be a bit of a slowdown and maybe a bit of a recession in earnings. So far, this earnings season has been better than expected, but we probably expect those earnings to come down to earth a bit, and we expect the market to broaden. We still believe in high-quality names, and we cannot re-emphasize that enough. High-quality
like
companies
what
on the equity side.
Categories would they go into? Names like what
Sure.
would be the high-quality names?
Sure, the high-quality names are going to be. First of all, we think this is not going to be a market that this is more of a stock pickers market, an individual equity pickers market. We like the sectors. We like 4 sectors. We like healthcare, consumer discretionaries, communication services, and consumer staples. And within those sectors, those are our highlighted favorite sectors. Within those sectors, we like some of the bigger names. Again, the names that we expect to continue to have a positive revenue growth and positive earnings growth. At the same time, on the fixed income side, we are playing it safe, and then we recommend clients to just stay true to the core, and we are investing in a shorter term government security investments in treasuries, and then again, we're just playing it safe right now.
Understood. It's great to see you. Dennis Polyak, thank you very much for being with us. Thank you.
Thank you, Nicole.
Plenty more to
Have a great
come
day.
here on Trading 360. Our 360 Spotlight, we'll talk to the Chief Operating Officer of cybersecurity company Trend Micro following the company's latest earnings report. And today's disruptor is Twilio with George Silla standing by. He'll give us all the
Twilio Bumble. Alright, let's see if SPY makes it to the next support. Yesterday's low was 445.27. Not expecting that, but looking bearish at least. We'll probably add to these puts if we break. Added. SPY's coming down some more there. GME's flushing a bit with it. GNS is holding up. Took a couple off. .6 on GME, breaking through that support. See where it closes end of day.
Here momentarily. By the way, I'm excited. You got Ben Watson on. We knew each other in a previous, in a previous life there. But anyway, with Google, the reason I'm looking at a bearish setup here is Microsoft is already in corrective territory. It's down 10% from recent highs. Meanwhile, you also have Apple. I mean, we're finally starting to crack tech a little bit. I think Google, I think Meta are right behind that. This particular Google spread, this is what I kind of call a little bit of a bigger out of the money spread. I'm going to go out to the OCT 20s. And the reason I'm going out to the October 20th expiration. Got to give myself plenty of time because I'm looking for a fairly significant move to the downside. I'm going to be buying a 125 put, selling a 115 put. That's done for a $2 debit. Nice defined risk shot on a $10 widespread.
Yeah, let's see if we can get there. I mean, it did hit a recent high of 133.74. You do have some time to get there.
Still
Ben
flushing.
Watson, good to see you. Thank you for being here today with us. Tell us your thoughts on this chart of Google.
Yeah, I'll tell you what, and it's good to see Donnie as well, because I'll tell you, as we look at Google, you know, this is one of those setups where absolutely there has been some strength, but perhaps a few of those warning signs kind of bleeding into the mix here. I mean, intermediate to long upward trend, you've got the 50 and the 200 that have been rising, but we see this gap up breakout on the earnings that really failed. Once it moved above that resistance, it really failed to move beyond that range. And so it's now consolidating along this 127.5 support area. Maybe see slightly lower high here. We could maybe even call it kind of an advanced block candle type of pattern. And it's just not making forward progress. So that being said, it perhaps is either just pausing, or if we start to see momentum shifting a little bit, we could see a breakdown below that support. You've got the rising 50 period simple moving average that's sitting right now right around that 124, 125 range. And if it breaks below this level at 127.5, kind of where it's been sitting, that next target to the downside potentially could be right along that 50 period simple moving average. The MACD that showing momentum just kind of falling off, starting to see a little bit of an increase in implied volatility even after the post-earnings crush in implied volatility. That might suggest that there is the potential for a little bit more movement than this sideways trend would suggest, Nicole.
Right, and that's the whole thing. So what do you think of that, Don?
Yeah, no, I like it. In fact, I caught the implied volatility bump a little higher as well, and thought to myself the exact same thing. Like, all right, this thing's actually pricing in a little more movement. And it's strange to see an implied volatility bump after an earnings announcement. So I do believe that the impact to Apple, the impact to Microsoft in recent trade is actually playing a role in Google.
Okay, next up, you're watching Bitcoin and the Bitcoin ETF, that strategy ETF, BitO. What are you thinking on this one, Don?
So I have a tough time in this market right here, right now. Obviously, I'm bearish on the overall marketplace and I'm bearish on tech. So I was looking for a couple of asset classes, like where can capital possibly rotate into, which actually brought me once again to BitO. So BitO is basically based on the Bitcoin futures marketplace. Nevertheless, it is an ETF. It's nice to be able to put together an option strategy with defined risk on it rather than go out there and sling Bitcoin and hope for the best. In this case, we may see a kind of violent rotation into BitO and Bitcoin products, maybe as soon as, well, tomorrow, given the fact that CPI, it's going to be rather explosive here. So in this strategy, this is BitO. I'm going out to the SEP 15. This one's not that far out in time. Obviously, I'm looking a little bit more near term here. So the SEP 15 expiration, I'm going to be buying the 15 calls, selling the 17 calls. Just a $2 wide spread. It's done for a 74-cent debit. It's what I term an in-out spread. It's kind of one strike in the money, one strike out of the money. As I said, a defined risk spread limits our risk to 74 cents. If we're right here in the very near term, this spread could do well.
And look, BlackRock, as soon as they started filing for the ETF, and you have, I don't know, 7, 8 others that have been doing so, it brought a little optimism to Bitcoin overall, which just crossed 30,000 recently, hadn't been there in a while, though it's pulled back some. Ben Watson, what are your thoughts here?
Yeah, well, you look at the stock or this ETF, and you look at the trend of the moving averages, those intermediate and long-term moving averages, the 50 and the 200 specifically, and they are both rising slightly and they're parallel, and you can kind of see that movement upwards, maybe a little bit of a squeeze into this ascending triangle, but momentum is slow, it's rising a little bit, it's still below the zero line, but I like what Donnie was talking about in terms of that range. You've got a resistance level that this is banging its head into right at that 50 period simple moving average, right around that 1575 mark. If it breaks out That next resistance on that ascending triangle is up around 1720-ish. But if it moves the opposite direction, we see a little bit of a pullback and more consolidation. You've got that 200 period simple moving average down around that 1430, which was, I think, right around a
Nice,
short
Bubba.
strike. That being said,
Well done, man.
this
We're
is kind of
slowly
caught in
scaling
this
out of
longer term, intermediate to long term squeeze.
I'll add on a bounce, though.
So a rotation in, you start to see a lot of buying pressure here, and that momentum shifts above the zero line on the MACD. This could pop
Like when we are going for
quickly
yesterday's lows.
up to those resistance levels, Nicole.
Look, and that's what you're counting on, right, Don? I mean, you're hoping for a
Not
pop,
any
right?
letting up.
That's exactly what I'm looking for right now is a pop. Look, I have no love for crypto.
The drops we've had the last,
in the
like,
short term or the
6
long
trading days
term,
or so have
but
been
in a
aggressive.
defined risk ETF like this, it's worth
The
taking
sellers have
that,
sold. It's
that
been
shot, especially when it's an alternative asset class
aggressive.
in a marketplace that, well, looks a little dicey at this point.
Been nice for puts.
All right, next
Wow, that
up,
thing
Tesla.
dumping.
You have a change in the C-suite happening. Elon Musk can't do the fight just now with Zuckerberg. He's injured, so we'll have to push that off.
Oh, what?
Your thoughts on the stock? 43 today.
First of all, we already have a market going here. Yeah, we already have a market here at Theo Trade going on, the Musk, fight. Obviously, we're a little put off that fight has been put off here. Nevertheless, Tesla, look, I have a tough time actually talking about this. Yeah, well, we're not the only ones, right? So I have a tough time talking about this because as much as I love their products, and I do, I absolutely love Tesla products. Look, it's rolling off this $300 level recently, and it is coming down. And Tesla has been very much a roller coaster. I mean, off the 200 level straight up, off the 300 level straight down. All I'm doing here is hopping on board halfway down. So Tesla's trading in and around that 250 handle. I'm going to ride it down. In this particular trade, I'm going out once again to the OC20 expiration. Okay, so giving myself a little bit of time because I'm buying an out of the money put spread. I'm going to be buying the 230 puts, selling the 220 puts. It's done for a $3.25 debit. Again, another $10 wide defined risk strategy. Okay, why am I buying an out of the money spread? Just trying to get ahead of what looks like a fairly significant move in Tesla right now to the downside.
Right. Okay. What are you thinking here, Ben Watson?
Well, I'll tell you, you look at this, and Don said this, it looks like a roller coaster. You get that definite roller coaster effect here, but the stock's been in an intermediate to long uptrend.
Nice, Bubba.
But this short downward trend on the right-hand side. 50
And he
period simple
flushed
moving
also
average
down
is
4%.
rising. 200 is going sideways after falling, and that would suggest maybe catching a little bit here. But what I saw immediately on this was kind of this rough, ill-formed, possible head and shoulders pattern over the course of the last couple of weeks, crossing, or a couple of months, crossing that last earnings announcement with that bit of a pop up and then the sell-off. Now, it's sitting on the neckline of that head and shoulders pattern, right around that 242, 243 range today. It could potentially bounce back up to that right shoulder at 293, but the pattern suggests, and a little bit of slowdown, negative momentum, it's pushing further to the downside in the MACD today. Possible breakdown below that neckline, maybe down to the 200 period simple moving average. That diagonal support sitting right around that 198 mark, Nicole.
Right, watching that MACD too. Final, thank you, Ben Watson, so much. Great look at the charts today. And Don Kaufman, final thoughts here.
Yeah, no, look, sell-side activity starting to hit tech, as I said. Tomorrow's CPI is fairly critical. And it's fairly critical because the S&Ps this week, specifically the SPX, we're looking at almost an $80 expected move. Right now on the week, we've done absolutely nothing. There's an incredibly high probability we're going to see that $80 move play out between now and that Friday at the close. So get ready for some vol in this marketplace.
Not many entries to get back short on this thing.
We will, no doubt. Thank
Keep
you
riding
both,
those ones
Ben
I have,
Watson,
I guess.
and of course Don Kaufman. Good to see you both. Thank you very much. All right, coming up next,
Risk
we're going
versus
to
reward is getting
spotlight
less
Trend Micro, the cybersecurity
and less as we
company
get
reported its
closer to
earnings
this low of yesterday.
We'll break down that report. The chief operating officer of that company is with us. We'll be right back.
There's a couple more here. A little more fleshy. RAD down 7.5. GME down 4. GNS up 15. The little emoji that's like tapping. It says elbow cough. Yeah, it's coming down a bit. Yeah, SPY doesn't look like it's done. I don't think we're gonna get a nice re-entry. Unless we break the low over here. I'm not expecting, not before CPY. Your lows there. Just close out of one of the Theta Farm plays. Send a message to the Theta Farm members on YouTube. I want to reduce some exposure for the CPY. That's true. Euro did just close. You got leaves. Yeah, just like opening stuff up right before such a big economic event. When the market seems like it's definitely already started rolling over. Little bounce here. See if we get an entry to go short again. The last little bit. Add to it. Eventually built an inverse cup. Close to it.
Move into modernizing data centers and protecting those. We were one of the first to protect cloud applications, in public cloud. So we tend to follow those market-making infrastructure changes. Most recently, though, Nicole, we're really fixated on modernizing the Security Operations Center, and that's the hottest spot of cybersecurity today.
So when you talk about the Security Operations Center, what is that?
So a Security Operations Center, most enterprise customers will have a Security Operations Center of some kind. It's their place for monitoring what's going on inside their infrastructure, whether it's within their company or maybe it's their applications deployed in a public cloud environment. So that's really the pulse, the heartbeat of the cybersecurity status of what's going on within an infrastructure. They need to modernize. They need to become much more efficient because ransomware is not letting up. The threat actors continue to actually get more organized and become more aggressive. So, they need to have modern security operation centers.
Yeah, and look, when we had the escalation of what went on with Russia, Ukraine, and that invasion, and look, then we really started to see cybersecurity companies working extra hard. I know you're always working hard. So tell me about the latest quarter. I mean, you've seen the net sales growth. What's working, and what do you need to work on?
Risk on return isn't great here, but I did grab some more.
We did just post our Q2 results. 11% net sales growth. 15% operating profit growth. So
I got to further strike down 445s instead of 46s.
We're really fixated though on our long-term plan out to 2025, $2.5 billion.
It could take a while for it to set up and
really
make that final
moving
low though.
Aggressively towards adopting more and more cloud SaaS technology. We've set a target for ourselves of $1.5 billion in annual recurring revenue, and all of that has been growing at a much more aggressive rate than our top line. So we feel like sticking to our long-term plan, it's actually going to produce even more returns down the road.
Yeah, understood. In the meantime, you know, I was looking up the company, and I saw how well it scored this year against real-world malware without erroneously flagging, you know, sites that actually are legitimate. There were a lot of pieces to this. I know you talked about the data centers and protecting those in public cloud. At the same time, and it's not just your company, but cybersecurities in general, sometimes they get criticized because you have so much of the information, the URLs, the IP addresses, locations, tracking things. How do you handle that? And what do you do about third parties or sharing that?
Yeah, you know, I always like to say, Nicole, it takes the whole village. It really does. There's lots of cybersecurity companies that are out there. There are a lot of infrastructure companies that are out there, and it really does take the entire village. At Trend, we have 8,000 trenders, our Trend employees, trenders, and we work tirelessly to make sure that we're doing our job of protecting our customers against threat actors. We have a lot of customers, and that's what we do. And we don't do it alone. We have partners like AWS. We have other companies that we work with on a day-to-day basis, because it really does take the village.
I see. I didn't realize you work closely with AWS. That being said, I mean, which ones are your biggest attackers? Are they from abroad, like Russia and China, or is it more from home? Where do you see sort of the biggest clumps?
You know, often salacious headlines is talking about attribution, and certainly Russia has been in the spotlight given everything that's going on there. What we tend to find is they're actually all over. Organized crime is organized crime, and it's all over. So identifying them is one thing, and focusing in on taking them down is another. One of our biggest partners that we have is with Interpol, where we work with law enforcement in order, when we identify them, to help get their help in order to bring them down. Interpol, Europol, FBI, we work with all these organizations.
Rackspace is up 14%.
We're fixated on going after these threat actors.
And look, these threats are real. Cyber threat detections hit a record-breaking number in 2022, and I'm sure we'll have a new number in 2023, 146 billion. So, Kevin, you're certainly providing something that's much needed at the right time. Kevin Simser, thank you very much, of Trend Micro.
Thanks, Nicole.
Coming up next, George Sillis is standing by. He's going to take a look at Twilio after the company's earnings. He'll break down the numbers and give us an example trade as well. We'll be right back. Trading 360.
Sorry. Let's see if SPY. Make it to yesterday's low here. Good profits on it. Nice. Profits. Looking for that gap fill. 62.50. Yeah, I like that. If I was up much on it, I'd maybe do the same. So just kind of rejecting that resistance so far. Trend looks strong though, volume looks good, so maybe just add if it came down there. Nirvana. Like that it reversed that good news. Very nice and bearish. Bros up 18%. Yeah. 63.98 gap on GNS. Yeah, 64 basically. Ish up 1%. Look at you. All right, it's coming down some more here. Taking off a couple of those 445s that opened. Off a couple more, one more of both. RAD's down 8.13.
44 and $76. So ideally speaking, you know, what we can make of this is that the assumption is that if it's in that trading range, it's not going to break out of that until there's a catalyst. Now, it could be in either direction, higher or lower. Most likely won't be until next quarterly earning. And of course, in this case, we're generating some yield, and hopefully it stays within those short strike ranges between now and expiration.
There you go, new low on SPY.
That a good example trade there, Twilio, our disruptor today. Appreciate it. Coming up next, we're going to take a look at Bumble. Now, the company reported its earnings, and we are seeing it on the move, a little lower here. Our panel ready to break down the numbers on Bumble, coming right back in Trading 360.
Yep, it's starting to slow down. Maybe might get a reversal by end of day. Maybe a handle. If it bounces on the support. Barbecue down 0.4. He just down 4. A little more fleshy flush. I want to close these, but I don't. I've locked it enough to where I should just be able to ride these. Only have 2 left. Buys down 0.75. So gave back all of the bounce from yesterday so far. Topping. CPI. GNS coming down now. It's up 8.3%. Fish still up half. RAD down 8. Excuse me. TUP doing? TUP's down 5.
Need a dating app. You might be able to just do it with a more AI search. So I thought that was kind of interesting.
All right,
That
SPY
is
coming down.
interesting. So the whole concept of dating apps is something that you'll be looking at. In the meantime,
Ooh,
JR, I
flush
think
below
the
the low of
competition base
yesterday.
is certainly a good story and something to start with.
Interesting.
I mean, something like Match.com, right, is very popular, another big name that's publicly traded, and that's a winner year to date. You know, what are the differences between these types of companies? And maybe do we need some more M&A or something? Because I'm not sure they all
449
survive like this, do they?
or 444.91
Well, I think when you look at Match is the
is the
dominant
low
player. They
from
have different brands, and many users
712.
don't realize they're all owned by
After that,
Match.
there's a gap.
So Bumble to diversify and to really spend money to build out like Match has, to us would be more exciting to see that
Doesn't
future
have to build a
growth, as
handle.
opposed to concern we have is cannibalizing your existing users by selling them other products. We'd rather see them be on a totally different app, branded using Bumble's expertise like Match has. It's a proved out strategy that Match has done, and to us that just gives a more compelling reason to own the stock long term with a strategy like that.
Yeah. You know, there are a couple of good things that you have here, Lee, when you talk about the international presence and the number of people, user growth. Tell us about those.
Okay, close my 556
Right. Well,
or
they did
446.
have momentum in their total payers this quarter. You know, the Bumble app is actually up 28%.
I'm gonna close my 445
They added
also.
139,000 net additions. That was up from 98,000 in Q1.
Okay,
The other thing I
I'm
mentioned,
out.
AI. There's a positive AI issue
No
also with them.
patience.
And JR was talking about new products. I'm wondering, they have this Best Bees where they use AI to make the matches more compatible, I guess. So they were kind of excited about
Yeah,
that.
GNS
So they
come
are
down a
trying
little
to do
bit,
some new products.
7%
They
up
have
now.
compliments out there, which allows you to send a message before you match. And there was a survey done in the country of India
Nice.
where 85% of users said they would feel better if they
I
got
flipped
a
my
compliment, if you will,
TD account to
before they
cash, and I
actually
can
match. So they
day
are
trade it
doing
basically,
some little R&D in there, but I think
which is
the
nice.
other companies are doing
And
just as much.
Yeah, understood. And at $16, $16.50 today, JR, you think it's overvalued. Where do you think it's more fairly valued?
I've had to go down the SPY for a while. Partially because it's in the back of my head where I can't, I can only do so many trades.
Looking at the results and the trajectory, the chart looks fairly
just kind of
weak.
messes with you.
It's going to be lower in the 14 range at this point. It'd be an area to look at it.
But yeah, I'm gonna try and
are you surprised to see that
grow
folks
this.
are cutting
What is it
their
now? A small
price
account.
targets, JR?
Not at all, because again,
Small account
from the
challenge.
standpoint of trying to excite an
Maybe I'll do a
investor,
video
you
series on it. We'll
really
see.
need to see much more top
I want to
line
have some
growth.
success.
Having profitability at this level, I mean, a PE is 140.
But the series will
looking
be
at
very
next year,
short.
even if they
2
execute,
episodes.
the PE is still
Count
way
blown.
too high. Rather see top line growth and see reasonable PE ratios 3-4
That
years
cash
from now, as
freedom
opposed
feels
to next
so
year.
good.
Look, and
There's
RBC
new low on
cut the
SPY.
price target, noting the intensifying
A
advertising
little more fleshy
market
flush.
competition. I mean, that's another area advertising
Next level
is so
down
important
here.
for these kinds of companies, and a tough one. So thank you both very much. A good luck there. We appreciate it. J.R. Gondek of the Lerner Group at Hightower Advisors and Lee Bolt, Charles Schwab. Thank you both.
Almost want to
That's
do
gonna
some
do it for
call
us here on
lottos.
Trading 360. I'm Nicole Petalides.
I'll
Thanks
wait
for
for the
being
setup
with me
though.
every single day live from the
I'll
New York
wait.
Stock
I'll
Exchange,
wait.
11 a.m. And
Should do a small account challenge. Those do well on the tubes, I think. A lot of volume right here. Winner gets a pizza party. How about the pizza party? I'm trying to so not open positions that are more than 10% of the small account portfolio. And then I haven't quite settled on like a stop loss. I was doing 10%, but man, how good my entry is, that's not been enough. But basically on my red days, just keep them small. On the good runner days, let them run. And the market's not always good for trading. I mean, you just have to, even if you're trying to trade it, like, be content with small gains, or if it's losses, just try and keep them small, because not every day is a good day to trade necessarily. Make money every day on it, but not every day has nice, perfect, clean setups. Yesterday was actually pretty nice. Took a lot of time and patience, but yeah, it worked out well. Today's kind of nice. I mean, so we had this head and shoulders up here on the 5-minute, but it was never breaking the neckline, just chopping around. And it still could have been an uptrend. Fill this gap up here. So just took some patience this morning. I think I got in and out of both directions. And then I just got out of my puts action on this candle. Had to step away. Then when I came back, we'd already broken, so that's okay though. I waited, and then got back in a puts here. And then scaled out. I think I had six or 8. Pulled a couple here, pulled a couple, like 2 more here. And then so it's down to like 6, 4. Bought back in, bought 6 more actually here on this bounce. And then closed out of all of them now. So today's trade was pretty easy, really. Pretty straightforward, not very indecisive, not a whole lot of false breakouts and chop necessarily. We had the consolidating liquidity building this morning, but then there's been a pretty clear direction. Bear flag, and now we're at the lows, so we'll see. Might get some reversal trade today, but I'm gonna be low when we get back gains. We've got VWAP way up here, could climb too. The 9 moving average, a lot of stuff I could climb up to. Let my losers run and cut profits early. Yep. Trying to get better at adding to winners, which it worked out today. So we have a setup here for shoulder. We have a head. If we build another inverse head and shoulders here, this could be an hour or 2 though before it's breaking out from that. Yeah, I saw LPTV and Zips picks. Didn't have a great reaction. GME is not getting any of this SPY bounce. Still down 4.3. See if SPY is making a handle or if we're going to start getting a reversal. Still pretty early. It's only 12.
Caesars, presumably because ESPN will likely release both of their contractual agreements with those two companies. So Wells Fargo said it's premature to conclude this is a game changer since past partnerships between online sports betting companies and media players have come up short. So there's definitely a lot of concern about, how positive this deal will be, which is why I was saying, Penn seemed pretty optimistic with that $500 million to $1 billion in long-term earnings. Analysts maybe second-guessing some of those numbers. Should note that Disney shares, as we said, were higher on this news, now down about 1%. Of course, if they're reporting earnings after the bell today, they're up against quite a few headwinds at this point in terms of, ad contraction, cost cutting, streaming losses, potentially less lines at the parks this summer as everybody travels on cruises into Europe. So I think that, this is just one piece of the business, but we're going to have to look for more commentary from Bob Iger when he's on the earnings call tonight.
Yeah, I think a lot of people, Caroline, were shocked that it was Penn Gaming because we all know Disney was looking for a partner in this space. And maybe, due to all the turmoil that they've had recently, this is all they could get at this point. But is there anything that you've seen from the story that says, hey, now anything that ESPN shows, they're going to funnel that into their new ESPN Bet app as opposed to allowing maybe DraftKings or FanDuel to allow betting through other sites? Will those type of restrictions ever come into play here?
That's what I think is still a question mark and people are still trying to figure out. Plus, it's not that you'll actually go to ESPN to do the betting. It seems like you have to go to Penn Entertainment. It will just be branded as ESPN Bet. So there's a lot of uncertainty there. And there's also uncertainty about if this means that Disney is actually going to sell the ESPN assets, because for quite a long time there was talk that it didn't want to get into sports betting, given its more wholesome, reputation, more family-friendly reputation, that sports betting doesn't necessarily play into, into its theme. So there's a lot of uncertainty on that front as well. We knew that Disney, ESPN was looking for a minority partner for ESPN, and there's also some uncertainty there if, some of these NBA teams or some of the potential partners will actually partner with them given this deal. So a lot of question marks still here, which is why we could be seeing shares under pressure and also Penn off the highs.
Yeah, you wonder if ESPN, they just spin that off completely to kind of get away from the wholesome side of their industry where they try to sell you everything. So that's the wholesome part of their business. All right, thanks to Caroline Woods, senior markets correspondent here, breaking down the story on Disney and Penn Gaming. All right, Alex, let's get back into the markets here a little bit. Typically, when I see yields down a little bit, the dollar down a little bit, I immediately think, okay, I'm going to turn to the futures or the indices and go, oh, they must be higher now. But we're getting a little bit of crack. I think the narrative has changed a little bit, where I know that August is historically a rough month for equities compared to
Repeat of yesterday?
The other 11 months. So typically see some additional volatility here.
Good to see
but
that.
it seems like the narrative has changed a little bit.
VWAP's way higher
for
today.
Markets or for expectations, maybe that's what I should say.
Yeah, it just seems as if the expectations got a little bit too lofty.
Yep.
And like a pendulum, it swings to an area and then must swing back. It can go both directions. And I think crude oil is a great example of this. I think crude oil, in many ways, has been the contrarian trade of the year. When times were a little bit more optimistic, crude oil was signaling that the road was not all clear. And we saw it really highlight the weakness in China before it was confirmed. But in the same way that maybe crude oil overshot to the downside and it's been repriced now and continues to reprice to the upside, I think equity markets have overestimated optimistic kind of outlooks in the same sense that I think tech stocks have overestimated and been overpriced in the sense of AI's impact. And you're seeing names like NVIDIA trading like, essentially high beta growth stocks. And yeah, they've had incredible growth, but we're talking about a $1 trillion company. This thing shouldn't be swinging around 4 or 5% a day. And that's what we've gotten lately. And so not that AI won't have an impact, not that it's not critical to the advancement of both the market, the economy, efficiencies, and it's maybe the next big thing. There can be bubbles at the same time. I mean, crypto, it's clearly been an incredible boon for many companies in terms of growing revenue. So things can get ahead of themselves. Pendulums can overswing in both directions. And I think that we're watching a lot of those maybe moves that have gotten a little extended, kind of refined baselines here. Not that there's mean reversion. There is no mean reversion when it comes to price. But volatility certainly has started to mean revert and work its way back towards historical long-run averages after, I think, getting a little too cheap, let's say. Volatility in the 13 handle with rates at 5%, multiple consecutive quarters here, going on 3 now, of earnings declines, deflation in China, inflation here, wars going on.
Yeah.
13 VIX just didn't feel right.
Yeah, and I'm surprised that the VIX isn't higher today on this slide and yesterday's slide. But Apple, I kind of wanted to get into a discussion. If we can get a chart of Apple up on a 1 year, I kind of want to look at, 7 out of the last 8 days, Apple's been down. I mean, that hasn't happened for over a decade. So you're starting to see that maybe rotation out of some of these names that I said this before Apple released earnings, and they were expected to see a decrease in revenue for the 3rd straight quarter, that Apple was getting dragged along by the AI story and the tech story as a whole, when typically Apple leads. But now you're starting to see that where it's plunged through its 50-day moving average. It's right at its 100-day moving average. Is that a microcosm for the overall market because it's such a big component within 3 of the 4 major indices?
Well, I'll say it this way. In the same way that those 7 names, those 8 names led us to the upside, if you start to lose them one by one, and you can make an argument that we have, I mean, Microsoft at one point was over 350. It's 323. Apple was pushing 200. It's 177. NVIDIA, Tesla, they're way off their highs as well. Netflix is a little bit wobbly. Meta's probably the one alongside Amazon that has been the strongest and held in there. I mean, they're off their highs.
They had great earnings, just like Amazon did, right?
But they had great earnings, and they haven't given back all of it. At some point, though, if you don't have a bunch of buying in, financials, energy, and some of these other sectors to offset that selling, it's just math. And the math right now is not working in the favor of the market. It's probably right for that, though. I mean, I don't think that Apple can maintain this valuation with the numbers that they just had. They didn't guide for a huge bounce back to growth. They basically said, expect more of the same next quarter. Well, this quarter isn't good enough for the valuation that they're holding.
Right.
I know that they've shifted into services, and it's been a brilliant transition. There's really nothing you can say negative about what Apple's done, but the street loves the stock so much, loves the company, feels so comfortable in the stock, that it just gets expensive from time to time. And quite frankly, you don't have enough upside to merit that, other than you're invested there because it's safer in your mind than parking your money elsewhere, especially with some of the downgrades that we saw in U.S. debt and things, maybe spooking some investors away from those type of products. Maybe there's a comfort in Apple that you know what you're investing in. You feel pretty comfortable that it's going to be around for a little while. And we know they got tons of cash. But to me, that's a defensive investment then, and that's also worrisome.
Yeah, and that's what people use it as, a defensive type of investment product, because typically or historically they've done really well on earnings. They've continued to grow. Their cash on hand is astronomical. Their balance sheet is, AAA rated. It's one of the most solid balance sheets out there, along with Microsoft. So there's reasons that the stock was doing well. It's still up 36% so far this year. So this isn't by any means a change in trajectory unless we start breaking some levels here. But I thought that was a really good chart to take a look at, to kind of get a hold of, hey, what led us up this year, where the S&P 500 nearly was up 20% before August turnaround. But what is, the valuations that Alex mentioned, I think, is really key here for investors and traders to kind of think about that. Hey, maybe this growth is going to slow down more than what the market has been optimistic about moving forward. But yeah, tech definitely leading to the downside today. Let's take a quick break, Alex. When we come back, we're going to take a look at Disney. Again, the entertainment giant has lagged the overall market rally this year and reports earnings after the close, after announcing that partnership with Penn Gaming. This will be an interesting one. Fast Markets coming right back.
Higher VWAP. Just a volume weighted average price, so there wasn't as much volume on this sell off. So potentially it has less conviction, and it'll be easier to go climb back up. Whereas yesterday it was lower, and so made it to VWAP, and then it really chopped around in VWAP a bit before it actually broke out. So yeah, that's kind of how I see it, I guess. Green candle there in GME. Hola, psych you up. Yeah, I don't think we'll break out of this range, but we have an inverse cup here, so this is a handle. Expecting, then we'll at least retest the lows.
Right here's note.
Pretty early to be calling the reversal, even though I already got in some. Because we do have this inverse head and shoulders built, but we could still see another double bottom or a flush through and a continuation on that cup and handle. I don't know. It's not a great setup for a trade yet. You want to see this trend line break? Build the shoulder up over here. We're going long. That's what I'll wait for. I got some already, but I'll average into it. Or I might buy some more on a double bottom. TP line? No, I don't think it got leaked. No, you would know. This is just a normal intraday move. Yeah, fill on GNS. Oh yeah, for this cup. Yeah, that would be 50% from the high. About. Might get it. Where's the cup really up here at 989?
Those are all trash.
GME slowly climbing back up to VWAP. Beef vagina. Chimichango el blanco, queso, salsa verde. Refried beans and sweet tea. Nice. 16. Now that it's broken down here, and we'll see if it closes below here. It could. My next stop on the train is 18 bucks for GME. So 16. If it breaks 18, I think it could definitely hit 16. Yeah, the calls I got a stupid entry on earlier. I just closed them. I'll try and get a better entry. Unless we get a breakout here, then I'll add back in, but I think it'll take some more time. 12:30.
Lower a couple bucks, $2-3. That's where you're going to profit on this one. And anything above that break even is also profitability. So, yeah, you get all
really,
upside with all your risk to the
Really?
downside on this one below that break even point. So good look
Yeah,
at
that
the
higher
1/2
VWAP.
back ratio spread here as an example in Disney. But coming up after
Shouldn't
the
have
break,
closed.
Alex and I are going to be joined by Andy Swan from Likefolio
Stop
for a
looking at me,
discussion
Schwan.
on the trade desk, which reports earnings after the close and will give us some clarity on the strength in digital advertising.
Oh,
We've
I
seen some
wanna
good
load-
gains
open
in
back up
Meta
on-
platforms and Google Alphabet
for a
post
retest
their
down here.
earnings based on advertising. Fast Market's coming right back.
If I can get it. Yeah, I mean, it might repeat yesterday. Don't let the market hold me that easily, though. Could very well chop down here until close. There it is. All right. Ish is up 1.7. Radicals down 8.8. Not very radical, man. Oh, I still like this. I canceled my order to get more calls, though. Don't need more long exposure for CPLI. GNS, it'll pop there.
Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment. That's going to be Andy Swan. He's a co-founder at Likefolio. Welcome back to the show, Andy. Okay, we're talking the trade desk, ticker symbol TTD. This is one, based on digital
Yes, I didn't
advertising,
need to close yet.
right? They work with all the multi-channels on this one. Stock's had a really good run so far this year. We
Awful
expected
entry,
to
but
see some weakness across the board as far
this
as
one I
advertising
just closed.
goes. But then you look at companies that rely on digital advertising like Google Alphabet and Meta platforms and some of the others, and it doesn't seem like we got that
For rejection
dip,
at 446.
in demand for some of this
40
advertising.
area.
What kind of data do you guys have out of Likefolio?
Yeah, I think the first thing we should look at when we talk about the trade desk is Roku's latest report. They blew out earnings. The stock, I think, was up 20-25% after earnings on a really, really good report. And the reason that that's important for a company like the trade desk is because the trade desk is essentially the marketplace where companies can decide to purchase ads on that display to streaming consumers via devices like Roku. So the more streaming content there is out there, the more consumption there is, the more ad space that the trade desk has to deliver. And if we look at the mix, I know it's hard to read on the screen right now, but if you look at the gray area at the top, that's the number of people, the percentage of people who are streaming only, and the blue is traditional network TV only. And so streaming has gained over the course of the last 8 years from being just 9% of the viewing population are streaming only to over 26% at this point in time. So really massive adoption is underway. I think that the streaming only section of this could get 50+% within the next few years.
We've
meaning
been just on a roller coaster,
like the Trade Desk
ready in a range,
provide the
more or
picks and
less,
shovels to advertisers to reach these
waiting
people,
for data.
only have more and more space to sell. And the reason why that's super important is because the Trade Desk is the best in the business at delivering.
I guess I shouldn't have closed out of those ones earlier.
Individualized, personalized
Oh, wow.
advertisements
I
to
got back in.
streaming viewers, which really
A little bit of slippage.
impacts both sides of
Eyes
things.
ripping up there now.
Increases the advertiser's ROI because they're delivering to the right person, and it improves the viewer's experience because
It's
the
still
ads
possible. We're getting an
actually make
inverse cup
sense
and
to them
handle,
and
so
fit into the types of things that they're interested in. So I think
be aware of
the
that.
Trade Desk
This
is a
doesn't
stock
necessarily
we've
have to
been
come all the way to
bullish on
VWAP
all
or all
year.
the way
We've
to
pounded the table on a few times.
open or
We
these
continue to
highs.
see really good signs that this is a company that has
Being that CPI
all
is
the
tomorrow, I don't
tailwinds
think we're going to
behind
get
it,
continuation
and it's
flush through the
executing
bottom
better
though.
than anybody else in the space.
Not until tomorrow at least.
And Andy, you can't help but
For that
kind
gap
of
to
want to
probably be
root
filled.
for them,
What I'm
given
assuming.
the fact that they're going kind of head-to-head with Alphabet and Meta, which have just absolutely had a stranglehold on digital ads and aren't too friendly to competitors, let's say, to be nice about it. When you look at happiness and you look at website traffic, is there data that you guys are tracking here that supports continued strength in this name?
Yeah, I was
there's
actually
that
really
resistance.
pleasantly surprised when we looked at consumer happiness. Now, the
Little
Trade
bit.
Desk is pretty much, a B2B type of platform, but there is significant commentary from industry experts on these social media sites, and we're seeing, what
Playing a little
was
bit tighter
little bit
since
of a dip,
it's still being a
earlier in
downtrend.
the year in terms of satisfaction, has
Closing a couple
recently
here.
reversed +6% quarter over quarter in terms of that overall happiness level. So I think they're really delivering. Their new AI tool is very popular, and people are speaking volumes about that. And then from a website visit perspective, I mean, this is kind of going through the roof. We're looking at visits to the Trade Desk up 20% on a year-over-year basis, which is a really large move. You can see it was, trending up and fairly statically trending up in a nice controlled way. But this explosion over the last 3 to 4 months has been something to see. So I think there's a lot of reason to think that the Trade Desk will be quite optimistic about the future when they get on this earnings call.
Andy, when you look at this this company and the total addressable market that the Trade Desk believes they have is about $830 billion. That's the whole advertising budget across everything at this point. Is that, when you look at this and your data is kind of reflective of it, that the need for this aspect of the advertising market is going to continue to grow? Is that what kind of supports your data and your outlook here for this stock? And do you have an earnings score going into this report after the close?
Yeah, I really think that just the absolute tailwind that the streaming sector is providing to the Trade Desk, and the fact that they're of advertising spend that companies are doing, it doesn't match up with the mix of consumed content. In other words, there's a big gap. There's a lot more people watching streamed content than there are advertisers seeking those people at this point. And we expect that gap to grow or to come together in a really significant way. And that alone could double or triple the Trade Desk's revenues, even without the growth of streaming. And so we're bullish on this. We think the stock's made a nice run. We've got a slightly bullish outlook going into earnings. Long term, we love the company, and if we get any type of move lower on earnings, we're going to be backing up the truck.
Backing up the truck.
All right, great stuff.
What are
Great
they talking
data
about?
as always, Andy.
Trade Desk?
Appreciate it. Have a great day.
Thank you. You too.
All right, that's Andy Swan, co-founder at Likefolio,
Wow.
breaking down the data here on TTD. Alex, when you look at this, their data has always been supportive, and they were ahead of the game. We talked about this stock probably about 3 or 4 months ago. They were really high on it. The stock's now up over 80% so far this year. So it has had that great run. But when you look at this company and the total addressable market, digital ad spend turning towards those streamers, this sets up well for this company, but valuation's high on a historical basis.
That's the hard part,
Yeah.
right? Because I think there's a lot of
9%
reasons,
down
like
on
I
Dish
said,
now.
to not necessarily root for this company, but like what this company has done
Well,
and
back for
respect
20
the execution that
240
they've
maybe.
had. I can't say it enough. The fact that they're going head-to-head with an Alphabet and a Meta, and they've held their own,
Dish
and
up
if anything,
1.8.
out-executed them in some cases, goes to show that they've got a strong leadership team, and they're doing a lot of things right for this industry. Pretty strong partnerships with companies like Walmart and Walgreens, which of course have pretty big retail footprints as well. I know a lot of the growth side of things is seen on the streaming connected TV front. But Netflix and Disney Plus and names like that, we were just talking Disney, a part of that kind of key growth engine going forward. And of course that they're going to be willing to be sort of that ubiquitous marketplace, less so than an Alphabet, which is going to be, hey, work with us to advertise on YouTube, work with us to advertise on Google search. It's not necessarily a marketplace for ads across the board. So yeah, this is a really, really interesting company. Very, very difficult in the short term, I think, to value what is overpriced, underpriced, or just right. But you can understand why Andy and team are excited about it long term.
Yeah, and we did mention that rally. Option market's pricing about a plus or minus $9 move either way in the shares, Alex. So implied volatility elevated. So looked at a strategy here where, hey, even if it does pull back, as Andy mentioned, you can still take advantage of that move to a point. So I looked at an unbalanced put butterfly here where I'm taking in an actual credit instead of paying for this strategy. So going out to the August 11th weekly series, so just 2 days till expiration. This is an earnings example. Buying one of the 80 puts, selling two of the 78 strike put, and then to wrap it up and make it risk-defying, buying one of the 70 strike put. So in essence, you're buying a $2 wide put vertical and then selling an $8 wide put vertical that constructs this unbalanced put butterfly. You're collecting roughly about $1.20 credit on this one. That takes your break even down to $74.80 is where you start getting hurt on this. You've got risk of about $480 per spread. Alex, give me your take here, because even above 80, I get to keep that credit of $120 per spread where I'm going to be profitable. And if the stock does fall a little bit, I'm still okay
GNS
on this.
bouncing
So
back
we didn't
up.
even coordinate or talk about our example illustrations ahead of time,
Brad
but
hasn't
this
yet.
is the same strategy, just with the defined risk.
Yeah.
So the 1-by-2 put ratio in this trade are the one of a kind. Essentially, you just are buying an out-of-the-money wing, and in the same way that we
Barbecue
didn't
is
do so
flat.
in Disney, you could have found an out-of-the-money wing. In the same way that you have in this one, you could have removed that wing depending on the risk tolerance and capital you want to set aside. But what a difference 180% implied volatility can make relative to 95% in Disney. This is a strategy that is, again, just $2 between that
Ice cream
1-by-2. Yet you bought a wing out of the money and you're still collecting almost 3 times the credit in the same expiration for a stock that's pretty close to the same price, if not actually a little bit lower.
Right.
So it goes to show those inputs to option prices, of which you turn up the dial on implied volatility, especially short term, it really can pump up those option premiums. I think this illustrates
'em
that
up.
well. But anything that's high probability, strategic, and reflects an outlook that you may have, especially in a name that maybe you like, but you're not so sure about its current price and you feel like there could be room for a little bit of a pullback, I think this is a strategy that should elevate itself up that list as something to consider.
Yeah, and that pullback that you mentioned, in the month of August, the stock's down 10%, so it has had a pullback from nearly $92 a share, and that 50-day moving average right at the 80 strike on this one, so maybe potentially lending some support here, but even if it does trade around that 78 strike, that's where the apex of profitability is on this one. I like that comparison with your 1-by-2 that was basically
Heavily
just
shorted.
Shorter cash put. This one
It's still
risk-defying,
stuck in
but
the
still
range.
collecting a
See it
pretty
break
hefty
out.
credit on this one. All right, now we're going to take a quick break here. When we come back, we're going to take a look at another stock that reports earnings. That's Wynn Resorts. It's up about 25% so far this year. Company
High
reports
short
after
interest
the
is not
close.
bullish.
We'll get some clarity on Macau and how they're doing and how Wynn
It's
is
bearish.
managing.
Just that in itself. to me. Nirvana. Three. Out of those, I don't want them now. Okay, let's slow down. Not overtrade through the chop before the direction's really reversed. You get better entry anyways. Oh, you got to bounce on that trend.
Or a chronic disease like heart disease and things of that nature, that could also force insurers to actually cover the cost of these drugs. And these drugs are not cheap by any stretch of the imagination. So that could also be a nice revenue driver in the years to come. We also have Eli Lilly that's also going to be conducting a study on Mounjaro to be able to see if it's going to be linked to the same type of reduction when it comes to heart disease and heart attacks and strokes and things of that nature. But that study is not going to be done for another 4 years. So that's why we are seeing this move to the upside here. And some of these other ancillary companies that are going to be a part of this, like Weight Watchers or W International, whatever you want to call them, we are also seeing a little bit of a bid to the upside because they are also having some exposure and have changed their business model in order to try to prescribe these weight loss treatments or these diabetes treatments because once again, it's proven to be effective and it's also a drug that has to be continued to be utilized here. Once a patient actually stops using it, they start to gain weight. So that also has a lasting effect or a recurring effect when it comes to their top line growth potentially here in the future.
Yeah, Kev, in the way that I look at this, it's also, I look at Merck and their Keytruda drug, which is, a gone across multiple partnerships they have with other pharmaceutical companies, and it just continues to grow when they didn't start it, that drug, for all these specific things that they treat it for. Is that what the excitement is here from investors, is that, these new drugs that are coming out, based on diabetes, now can be used for a multitude of things, and we haven't even touched the surface yet?
Oh, yeah. I mean, that's a trend that's been happening in biopharmaceuticals for a very long time. Even if you look at Viagra, it wasn't used for, erectile dysfunction or what have you. It was supposed to be a heart medicine. And look how that took off. And so this is kind of common in this space where you see drugs that were developed for one particular ailment or treatment, and you do see, positive side effects in other areas of the human body, if you will. So that's kind of how this all works out. And once again, when you start going to weight loss treatments, I mean, you have a fairly significant population, especially here in the United States, that struggle with weight management, as well as also struggling with, trying to reduce the risk of heart attacks and strokes and having heart disease. So if you have kind of that double-edged sword, that's where that market opportunity can come in handy here. And I think that's probably why the marketplace knows that this could be a growth driver here in the future. I think the biggest hurdle is going to be insurance companies, as well as trying to get Medicare coverage. And we see that Eli Lilly also did announce that around 73% of qualified users or individuals of Mounjaro was actually covered under Medicare Part D. So I think that's also another
Missed the entry on that bounce.
as well. Not
Bounce
only
nicely on that trend,
private,
though.
but also potentially public insurance could be covering the cost of these drugs, which once again are very, very expensive, and the margins
Also
are going
break
to be
on that
fairly wide
resistance.
here, and that's why there's a lot of optimism in the marketplace.
Keep getting awful entries.
Yeah, both stocks hitting all-time highs, and Novo Nordisk earnings tomorrow morning, so we'll get some more clarity on maybe some guidance moving forward
23 bank earnings
based
bullish.
on these drugs. All right, great
Sometimes.
stuff. Thanks to Kevin Green, senior markets contributor here on the network, breaking down that news story. But now let's bring in George Tillis,
Keep telling
senior
yourself
markets
that poison.
correspondent. George,
GNS
we're
is going
talking
to the moon,
gambling, we're
baby.
talking Wynn.
Moon.
One of the things I always thought about Wynn was they used to get 70% of their
Yeah, I don't know. Got a
revenue
head and shoulders there on the
based
5
in
minute.
Macau,
Feeling
right?
better.
They kept the lockdowns down a lot longer. Now they've got this
Could be a
Encore
gap fill.
Boston that's doing really well. The reopen's done tremendous things for this company. But give me your breakdown here of Wynn ahead of earnings.
Well, I think one of the important factors of Wynn is the China exposure, which is now less than 20% from 70%. And I think that's a meaningful aspect to this business in particular, but also across the other competitors like MGM. They've actually decelerated their sales in China quite aggressively since 2019. I think that's more cautionary, and the way the market's appreciating these businesses now because of the exposure they had, which was significant as a percent of revenues back in 2019. When you look at Wynn, I mean, the stock is up about 19% on a year-to-date basis. It's higher by about 54% over the last year. And this is a company that's made a huge adjustment
Last year's at
when it comes
$12.48.
down to both
3
sales
minutes ago.
and earnings compared to last year, but also significantly better than
There's a
2019. Now,
10-minute gap
look at earnings
earlier
per
from
share, they're
12.38
estimated
to
to come in around
12.47.
51 cents versus a loss of
It's
82
starting to get
cents
pretty,
last year for the same quarter. The
Cody.
profit last quarter was 29 cents. So we're basically seeing almost double relative to last quarter sequentially, while at the same time, if you look at revenue last year at $908 million, they're expecting $1.53 billion, and that's about a 68% increase compared to the same quarter last year. So overall, the prospects for Wynn seem to be well-founded in terms of the price action we've seen over the last year. Not to mention, you got to think about the full year profitability for 2023. They're expecting that, and we haven't seen full year profitability for this company since 2019. I think that's very important because back in 2020, in the midst of the pandemic, this company lost over $19 a share, and they're expected to earn over $2.68 a share this year alone. So we're seeing full year profitability despite the run up we've seen. All else equal, some challenges perhaps in China going forward. One would say that based on the estimated earnings growth for the next year at around 56%, the stock is only trading around 38 times forward earnings. So one would say based on growth, its PEG ratio or PE to growth rate is less than 1, and one would say that's a good value as well.
George, when I look at Wynn and the reliance so much on China previously, they've opened that Boston Encore, as I mentioned. That one's doing real well.
6%. What the heck, man?
They've got another one opening not till 2027 in the Middle East. But is that the key for this company, is to kind of diversify away from China, kind of like manufacturers are, and companies aren't opening plants in China anymore, kind of diversifying. Is that the key for Wynn moving forward?
I think so. I mean, if you look at just from an overall business strategy standpoint, onshoring has become a new thing because of the risks associated with global trade or essentially global political environments. You also have to think about that challenge in China as well. So I think what Wynn is doing is diversifying. They're not just concentrating in the United States, they're diversifying globally in friendlier nations that have good relationships with the United States. So I think that's an important factor for their business. But if you look at where it was versus where it's at, and where it's expected to go, it's been a remarkable change of events for Wynn. And even the balance sheet, I will say this lastly, is relatively sound. I mean, market capitalization is around $11.5 billion. They have about $3.5 billion in cash, and their debt is about $11 billion. So it's about 1 times equity, and that's been reduced significantly over the past couple of years, while at the same time reducing expenses, shoring up revenues, and that has transformed the business from losses on an annual basis to estimated profits. And I think that's one of the reasons why the stock could continue from here, all else equal, if they did report some issues associated with China and some of the foundations of their growth.
All right, great stuff. Great backdrop here for us, George, going into earnings. Appreciate it. That's George Tillis, Senior Markets Correspondent here, breaking down Wynn ahead of earnings. Option market pricing in just over a plus or minus $5 move in the shares. So implied volatility elevated in the near-term option. So wanted to take a look at a strategy as an example here that takes advantage of the divergency and the high implied volatility in the near term and maybe buying something a little less. So I looked at a double calendar position here in Wynn Resorts going into this report, giving myself that 1 standard deviation move. So looked at buying in the August 18th monthly cycle that expires in 9
H bought more this morning.
Days. Buying the 108 strike call and buying the 98 strike put, both out of the money to the upside and downside, and then selling the near term August 11th, 108 call and 98 strike put. Double calendar position. If you think that the stock's going to move about 1 standard deviation, but you don't have to pick a direction on this one. Paying roughly a debit of about 90 cents for that, so there's going to be your risk, $90 per spread. With your break-evens about 114 and about 193 on this one, or 93 on the downside, about 114 on the upside, where you can still remain profitable on this one. Now, the key here in this type of strategy is you're buying about 60% implied volatility on aggregate in those August 18th options, and then selling about a 94% implied volatility. So there's where that divergence is created, which means that you're paying less for that calendar spread with the idea that you want it to move. You've got 2 days to expiration on your short options, so you have some assignment risk on those. But the whole idea on this type of strategy is you get that 1 standard deviation move, implied volatility collapses in the near term historically, going into earnings, post earnings,
up a bit.
And then expands the price of this double calendar position. But you definitely need to move on that type of trade. Take
Not so
advantage of those implied
This is up
volatility
1%.
divergences. All right, that's going to do it for us today here on
RAD
Fast
down
Market.
almost 10%.
Stick around right here on the TD Ameritrade Network. Next Gen
Only
Investing is
Wednesday.
coming up.
I shared an interesting post about RAD ownership. I guess over 50% are individuals on it. Kind of interesting. Are they going to share their margin goal? It's okay. Sold them at 11. Well done, sir. I love it when margin gives me good sells. Margin department knows what's up. Right, 1 o'clock. Made it. 23 likes. Not bad, guys. Not bad. I appreciate it. Yep, 2% today. All right, looking for 445, 80 or so for potential support here on SPY. Needs to dig that deep. Looks like it is. Yeah. Yeah. GNS back up to view up. 16%. GNS is popping. I would have added some calls there, but I'm good. I'm not going to add to it. I've got enough. Excuse me. There we go. SPY is breaking it up. Got view up at 447. I might just hold these calls for a while. I don't know if I'll close my view up. We make it there. It would have been a hard entry. If I'd closed here yesterday, would have been a great entry. I guess on the break for the retest, but no. TUP has been selling off. Down 14% now. Look for a gap fill, maybe to go long. Also to affect this trend line. There goes my spy. And GNS, that VWAP, GME hasn't had much. GME's not had much of the bounce with the SPY. Maybe end of day.
Bullish side. Thought we were giving it room, and it definitely overshot that to the upside. I think we looked at the 157.5.
That SPY's making its way back up.
Yeah, tear that
Back
one
to
up.
the WAP.
This is just too big of a move, so we'll see if it turns around back towards those strikes later on this week. Next one on the list, though, is Roblox. This is a name, Jenny, that we used to talk about, it seemed, all the time. It has not been as much in the news, it seems, this year. But this is still, to me, a pretty fascinating company. User-curated content, sort of a crypto bent, sort of this metaverse bent to it. But neither have really been headline makers this year.
No, and this was a pandemic darling, and I think that this price activity we're seeing on a year-to-date basis, it's up about 6%. Today's mass move to the downside speaks to the fact that there just isn't the same amount of interest in a name like Roblox, which does still trade with some pretty healthy volume, but some pretty disappointing earnings. They posted a wider than expected loss and a much greater loss than they posted a year ago. So we're seeing some pretty broad selling as a result of that. Now, on an analyst perspective, they were in line with what the street had been expecting, but I don't think what you want to see right now is that they're losing more money than they were last year. Revenue also came in shy of expectations at around $781 million versus the $785 million expected. This was up on a year-over-year basis, up from about $640 million a year ago, but again, sort of well off what the street had been expecting. They did mention that during this quarter, they built out plans that they believe enables them to generate operating leverage against infrastructure that also will start to ramp up their spending next year against compensation expenses that are starting in the first quarter of 2024.
Is it halted?
But all in all, this name has just not able to
Just
please.
barely getting traded.
It was a really high bar set from its really strong performance in prior
You got
years.
10 minutes between
Roblox,
trades.
I always think of as like coined itself as the original metaverse. And depending, I guess, on your opinions on the metaverse,
that's to be expected when they start shutting it down.
Interesting way to play. AI has not been able to boost this name at all.
Downgrade
though,
it.
Again, it's been relatively boring this year, up only about 6%, making a
Less
huge
people can
move
buy
to the
it.
downside today, though.
One thing that I think is a positive from this report is that what I'm seeing is that the daily active users, which were up about 25%
Ultra
year
MAGA
over year,
resistance.
are now actually seeing the shift more towards a little bit older demographic.
Maybe.
That used to be something that was really associated with young kids. Apparently now the over 13 demographic is
stop.
5
Just
times
break
larger
even
than
on
the
those
under 13
contracts.
for this company, which is good. I mean, more likely to spend
Don't wanna
some money
give
if you
back
got
any of
some,
my gains
right?
today.
I guess if you got access to the parent's credit card, who cares how old you are? But
I want to
all
just
things
hold
considered,
them, ride them.
not the
Only
brightest
1 o'clock.
spot for Roblox today is a stock under a pretty good amount of pressure, I would say, Jenny. when you're down 20%, it's hard to spin anything too positive. Not a great day for Roblox. Next one on the list, though, is Plug Power. This is another name that was like a pandemic kind of name. It's a lower price stock. It's alternative energy. It gets a lot of attention, but it really hasn't outperformed too well the last few years. So far this year, kind of meandering.
Yeah, this name is definitely meandering. It's down about 13.5% this year. It is up off its low by about 45%, but they do still have earnings ahead. Second quarter earnings expected today after the closing bell. And this company, frankly, has a pretty dull earnings surprise.
NBC says it's off hours.
Missed on Zach's estimates in each of the
I'm still seeing time and sales.
The average miss being about 35%.
We had
So for that
109. We just had a trade.
Now some revenue that is expected to rise.
We will still showing it
6% on a year-over-year basis, but this company doesn't exactly have the best track record. Now, something that is expected to be a bright spot or a tailwind in their upcoming quarter is some higher sales from hydrogen site installations, as well as liquefiers and cryogenic equipment, as well as systems that are expected
we'll see if we'll make
to
a
boost their revenues
normal
as they
cup
have been
here.
expanding their various
Climb back up to this high.
Zacks is estimating their revenue from sales of their equipment and related
Which would then be a
infrastructure
repeat of
to rise
yesterday.
around 67% on a year-over-year basis. That's the brightest spot for this company. However, higher energy prices and inflationary pressures are likely to have dented some of their growth in terms of their second quarter. They've also faced, amid this tight labor market, some labor shortages expected to have resulted in higher costs for a company that's already not a profitable company yet, so not exactly the headline you want to see. We're expecting losses at around 28 cents per share for Plug Power. That has, again, fallen out of favor this year. It's pretty much been in a relatively stuck range when you look at the chart. I mean, it still is down 14% on a year-to-date basis. It just hasn't been the most exciting player. Again, it was once a pandemic darling, it seems like.
Yeah, this is
today's one of those days where I could have just gotten calls right when I closed my puts.
Where the percentages start to get inflated.
You never know.
Right? It's down 20 cents today, but 20
Could
cents.
have done it and just had a stop loss, I suppose.
You got to kind of take that with a grain of salt.
But very clean price action
today. A little bit more given that lower price tag, but analysts mostly still like it.
Training
about
wheels
two-thirds
for
of them in the buy camp. Another 30% in hold. So really, only one of the 33 analysts being looked at. By Bloomberg or in sell, so 3% of the analysts. Of the 31 of those that they use to kind of come up with a consensus price target's at $17.80. I mean, that's a lot of upside from here. It's $7 full from the current share price. Nearly 70% rally. Probably would start with a positive report out of earnings to get that kind of a move if it's going to over the next 12 months. But time will tell. Last one on the list, I think, is no doubt the biggest one here. This is Alibaba. This is a name that is always talked about anytime you talk China. It's like our one stock that we all know is a Chinese ADR. Amazon comparisons, cloud comparisons, you got it, but not a good performing stock the last few years.
No, and this story is definitely wider than just the last year because it is up 7% year to date. It is off its lows by about 63%. But talk about a stock that's been range bound. It is just stuck. It is still above its 50 and 200-day moving averages right now, but relatively speaking, this is like the Chinese Amazon. Actually, when looking at the expectations for this upcoming report from them, their cloud segment has turned out to be one of the key drivers of their overall top-line growth. Very similar to the story of 2 years ago in Amazon. So in the last reported quarter, revenues from their cloud computing segment stood at around $2.7 billion. This accounted for about 9% of their total revenues. This figure was down about 2% on a year-over-year basis, but they have said this is expected to be their growth engine. Their cloud computing business has been gaining traction in China as well as other international regions, while they're also strengthening their global data center network, which is anticipated to be beneficial, of course, to this company when they report. We are expecting adjusted earnings at around $1.97 per share, would be an improvement on a year-over-year basis on revenue of around $30.8 billion. Baba has been really taking some strong initiatives, though, towards making its key cloud products serverless
above VWAP
to
there.
prevent customers about worrying about managing various servers and infrastructure due to some, I'd say, lack of security trust as well as just overall product development.
Get rid of this.
But of course, this company still is hit by some adverse effects of the COVID pandemic that has weighed on so many of these Chinese companies. Also, global inflation is set to be a concern here as they are very consumer facing. They are still definitely an e-commerce player. So getting a lift today, up about 0.3%. We are down about 7.5% so far this month amid the broader weakness. But some of these Chinese companies have just been so disappointing to watch because we are awaiting this long talked about recovery that just doesn't seem like it's happening yet, or at least being reflected in these companies' quarterly financials yet.
No doubt. This is still, if you're comparing to Amazon, it's more Amazon of like 10 years ago. The cloud is not up to snuff with AWS yet, but it is expected to return to growth year over year after a quarter of declines. But such a commerce-driven company,
it's showing like it's still trading on Webull.
China company, and expecting to see that segment of their revenue grow about
Just
5%.
hardly being traded.
So, not the highest
Last trade was at
but growth
3 minutes ago.
expected here for Alibaba, and as you mentioned, it's just
it's halted for people trying to buy it in Europe. I think
not necessarily done bad.
They're not able to buy
year,
it.
But I mean, this stock at one point was almost.
And as Lords has said, it's been downgraded to
made a bit
expert
of a
level,
recovery, and then it's
think
just sort
expert.
of went sideways here.
I don't know. It's been downgraded a level.
Relatively wide range from
So,
about, let's call it $80.
Might be showing up differently on CNBC or something.
But two names pre-earnings.
Beautiful SPY.
I think it's clear we're going to look at the pre-earnings ones.
Right, and unfortunately, the more lackluster performers of the group, although Alibaba, I guess, you could say it's still well off of those 52-week lows, but we'll be diving more into the technicals in Plug Power, as well as Alibaba, like Alex said, ahead of their earnings events. Alibaba
Guess I could have averaged. I just didn't want to get greedy on it.
We'll also be looking at
contracts.
some example trades, so stick around. Next Gen Investing, we'll be right back.
Jenna told me to run, so I ran. Ran all the way to California. Hit the ocean. Thought maybe I'll turn around, run the other way. Ran all the way to the East Coast. Hit the ocean there. Thought maybe I'll just turn around and run back. Rivian's not trying to break out. Brittle. Come on. Come on. Merely trying to climb and claw its ugly chart back to VWAP after a big sell-off, a much larger sell-off. Dish is coming down a little bit. Hello, VWAP. Radicals down 9%. Carvana down 3.5%. Wife direct to send it to Nathan Bedford Forrest. His daughter's the American Revolution papers. That is neat. Lie on a pretty wicked uptrend here. Let's get back to open.
Volume quite a bit.
Well, I would just say in terms of like its market cap, Alibaba is the largest Chinese ADR. So I think for that reason, it's a more compelling story.
I call it Alibaba.
E-commerce space.
Am I
Not
wrong?
that I'm not into the whole hydrogen liquefaction, some of these terms that came up when I was previewing their earnings. But we'll start things off here with Plug Power. Here to tell us now more on the technicals, though, I'd like to welcome in our chart master, Ben Watson, who is joining the show for the very first time. Although, of course, he's an expert in the chart master world. So, Ben, excited to have you have you on the show today. Walk us through what you're seeing. We'll start things off with Plug Power.
Barbecue's still trading.
Yeah, let's call it Chartmaster Unplugged today, Jenny. But as we start to take a look at Plug Power, I'll tell you, you guys nailed it when you talked about the fact that this has been kind of languishing and maybe dragging a little bit behind, and perhaps the market lost interest a little bit. It's been in that longer term kind of gentle downtrend, now starting into this basing pattern, intermediate to long gentle uptrend. On the other hand, 30 period simple moving average is starting to rise here over on the right hand side, but that basing pattern building up underneath that 11.5 resistance saw the breakout mid-July, failed the retest, came back down, failed through, back down through that level of what was now support. So now we get the price sitting here, a couple of hammer candles yesterday and today underneath that 30 period simple moving average. Just not a lot of impetus to the upside. Maybe a little bit of nibbling on the part of the bulls. But I'll tell you what, if you look at the RSI down in the lower panel, it is falling off sharply into this earnings announcement. It's really bled off much of the breakout momentum that it had into that July
I meant to just close one, but I closed all of them.
Just not a lot of oomph behind this plug, so it might be a dead outlet that you're plugging it into.
I think we could make it back up to
said,
448.50.
Gain some traction, the potential is for that bounce, maybe back up to that 11.5 resistance and beyond. That $17 price target that you were talking about, that seems far, far away from where this has the potential to go from what technical analysis suggests. And if it breaks down, that $10 mark seems to be a level of support that's kind of defined the midpoint of this basing pattern over the course of the last few months here, guys.
Yeah, and this name, for that reason, Ben, we're going to look at an example trade that utilizes this more languishing price activity. I like that word that you both used now. So, Alex, when trading this name, given, like Ben said, we're just not seeing anything to excite us really with the overall trend right now. Walk us through a more neutral leading example trade.
Yeah, and it could be a function of the fact that we have this earnings event, but this is a name that you should associate with huge volumes in terms of shares just because, one, it's a lower price stock, but I'm looking at these volume bars on the chart. There's 10 million shares traded today. It's a healthy amount. It's certainly not a name that isn't trading, but this looks like almost no interest relative to some of these other days. I mean, yesterday we saw 17, but back in May, this thing was trading 62 million shares a day on some days. So it's certainly lower volume right now. Maybe that goes to show some of the things that Ben was talking about, where investors are losing interest just given the fact that it hasn't done much. But I wanted to look at a more neutral style strategy, as you guys said, for more of a languishing like trade, especially if these earnings announcements don't deliver the volatility that investors are so anxious to see. We're looking at selling an iron butterfly this Friday's expiration. Selling the 10.5 straddle right now in real time. Plug is trading at 1074. So this is a little bit on the bearish side. Someone who wanted to lean a little bit more bullish may select the 11 straddle. Just going to come down to that personal preference and the fact that there isn't 3/4 wide strike availability. It's 10.5 to 11. Those are your two choices. So if you wanted to use this strategy, you're sort of limited by that. But we went ahead and bought $2 wide wings. If we're able to get a $1 credit on this, that would make the break even to the upside 11.5, the break even to the downside at 9.5, max profit at $100. And because it's a $2 wide spread, collecting $1, that leaves $100 in risk. If we look at the risk profile, it's going to look almost like a pyramid in which it levels off, of course, on its max losses. That's almost your ground level. That's your worst case scenario. But then, of course, really symmetrical triangular risk profile here, where penny for penny away from that 10.5, it's going to be either profit or loss once you get past those break evens. Those break evens, of course, again, as listed there on the screen, 9.5 and 11.5 theoretically at expiration. Best case scenario is very clear on this one. Go to 10.5 and stay there throughout the duration of the week. That's the only way you could capture that full $100. Most of the time, a trader or investor who's using this type of a strategy, what they would do, Jenny, is they would put this on with the intent to take it off prior to expiration and hopefully take it off for a price lower than they sold it for. This is typically going to have at least one option in the money at any time. And as you talk about all the time, that equals assignment and exercise risk as you get into that expiration, and which your position could look totally different come next week. And we know that that's not necessarily what you want to see. So a little bit of a heads up on that one. Whenever you're looking at these strategies, trade management may be in order. But that's Plug Power, looking for a little bit neutral, a little bit bearish.
I think that's really well put. And, of course, to utilize some of this more weaker than expected, at least on the year price activity. But now Alibaba, and what a whole other beast this is when looking at the chart band, because this is really where time frame I think is so important. Up 7% this year doesn't, I think, necessarily paint a picture of some of the weakness that has plagued investors of Alibaba for the last, 3 years at this point.
Yeah, and Jenny, your comments about kind of the post-COVID moves that BABA has made and the headwinds that have been facing the stock have played out in the price, because we've seen this overall long-term sideways trend, which perhaps now is starting to resolve itself a little bit to the upside with that expected stimulus and the idea of maybe recovery. And you can see that it's in an intermediate term uptrend. The 30-period simple moving average starting to rise once again, but that intermediate term channel, and this is traversed nicely back and forth over the span of that channel, really since the last earnings announcement, now coming down from the top of that channel, fell below the midpoint, but bounced really nicely. And I like seeing that. That suggests that there is some attention being paid to where those significant levels are of support. Bounced up off of the 30-period simple moving average, off of that 92.80 mark. We get a little bit of a gap up sell-off today, but it's testing right at that midpoint. So that would suggest that maybe that short-term downside is perhaps abating a little bit. The possibility is a breakout perhaps to the top of the channel up around that 104, 105 range. If it breaks to the downside, you've got a couple of levels of support right about that 88 mark or so, and then 90 mark, and then back down into that lower channel support around 89. But RSI kind of echoing what price is doing. It's turning a little bit flat here, despite the fact that it's pulling back off of that mid-channel resistance today. So that suggests ahead of the earnings announcement, maybe investors waiting to pick their shot here in Alibaba.
Right, and we are seeing at least some strength today. I mean, it's relatively small. It's up 0.6%, but attempting to get some excitement here as we have this earnings event tomorrow. But appreciate the technical breakdown. As always, Ben Watson, thank you so much for joining us today, our chart master. So now in trading this name, Alex, looking on to take perhaps a different stance, lean into some of the more excitement and price activity we've seen as of late. Like Ben laid out, it's seeing a little bit more, I'd say, trend off here, not necessarily the strongest uptrend. But, hey, it's up 0.6% today. We'll take it.
Yeah, it's pretty strongly correlated to the overall market. I'm seeing a 3-month correlation to the S&P 500 of about 0.75, which is considered strong. It does tend to have a gappier looking chart because it's an ADR, and its normal trading hours are, of course, going to be overseas in Asia. So you will see some kind of odd jumps around on a daily chart. But there's a gap up around $100. The market maker move is about $5.30, and the current share price is about $94.80. All of this is kind of corresponding that if you got an up move, maybe it runs into a little bit of resistance up at around that $100 level, and of course it's a big round number. So we looked at a strategy that would benefit from a move right to 100, no further, and of course no shorter than that. Looking for a move really right to that point. It's call calendar, 100 strike call calendar. Selling this Friday's, buying next Friday's. If we're able to do this for a 50-cent debit on this one, then of course it would be a full 50 cents, would be a $50 total risk. I know we have 100 there on the screen, but really $50 in risk on this. Bullish directional bias, but of course this is something that can be customized. We talked about this all the time, Jenny, with these strategies. It's really an aim small, miss small, but you got to be right. It's like throwing a dart at a dartboard. If you're aiming for the target and you miss the target, well, then you're going to, of course, not get the points. And this the same thing with this type of a strategy, in which you can see on that risk profile. It's not as triangular and as sharp of edges as the last one we looked at, but similar shape in the sense that there is a best area on the chart, and that best area on the chart is the strikes that you used. In this case, it's the 100 level.
I don't know what's going to happen, Poison.
Doesn't need to be perfect, but of course a move way beyond, like we saw in Celsius, isn't necessarily going to work, and a move
RAD down
lower
almost
or
10.
not at all might not work either. Max loss, of course, 50 cents, but this again can be moved around to better reflect an individual's outlook on a stock. This being the bullish one, looking for a move towards that market maker move, which is looking at that 1 standard deviation range on option prices, Jenny. Expiring tomorrow on the short side, expiring next week on the long side.
And of course, they have earnings tomorrow morning, but it's like the release on, I'd say, the Chinese time zone. So it's sometime at like 3 a.m. tomorrow, I believe, or like midnight. But we'll be keeping those results on our radar. And like you pointed out,
Yeah, I meant to trade
we'll
next
also keep
days
in mind for both
today.
our example trades today. They do contain multiple legs that can lead to higher transaction
Maybe I'll get
fees.
some
Short
calls here
options
from
can be assigned
tomorrow.
at any time. And carrying option positions into expiration can add risk like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. So we are looking at the shakeup that is hitting all sports gambling stocks. DraftKings down 9.5%. Penn is up
450s.
over 8, almost 9% now, though. What this means for some of these companies and the long term of gaming, we'll discuss that more coming up next.
Probably good. No, I'll just leave it alone. But I did want to set up like a strangle or something. Maybe. Because CP lies in the morning. So I guess I could do the futures. Yeah, I can just trade futures. Trading that comes out. Might as well. I don't know, Fire Marshal Bill. I don't know, man. You said you wanted to buy more. You wanted to go to 8 so you can buy more. What you said. Hey. You should be happy. It's coming down to 8. I don't know if it's actually coming to 8, but... Alright, SPY. Boy. About to make its way back up. Goes. I'll just leave it. I'm too slow. Whatever. Alright, RAD down 10.11. For some reason these puts have not gone up in value at all. These September 2 strike puts. Down 10%, they're only up 15%. Look at the chart on these. Look at this. This is the put value. That's 724, so these are what, daily? These are hourly. Gone from the very low 15 up to 23, but it hasn't done anything. Stock's down 10%. These haven't even crazy.
Money in order to be able to meet the need, and that also is going to not only impact gross margins but also deplete cash reserves.
So Kevin, this is such a good point, because we discussed AI and we discussed some of the capabilities that still need to roll out, the costs associated with it, the data servers that still need to be built. I mean, all of this various infrastructure that needs to still occur before we can really get excited about AI being totally here, right? So is this going to be something we hear persistently? You mentioned we heard it basically from Microsoft, but to me, this is an interesting component of the AI craze. We're even seeing NVIDIA shares down, 3.5% today. I mean, is this something that the market just didn't consider when some of these stocks shot up astronomically? Because this stock here, I mean, is still up over 200%.
Yeah, I think I might open up a
call
call and put close today.
Yeah, the market definitely got a
tomorrow.
little bit ahead of itself here. And actually, if you look at a lot of these big tech companies and these semiconductor companies, NVIDIA is really the only one that moved their guidance as aggressively. And so that also puts a high bar in there for them if they're not able to meet those targets, especially in the near term, because of maybe, companies may not spend as much going into it. They're still trying to plan, or we do see any type of supply chain issue when it comes to trying to provide these new chips to the marketplace. I mean, that could really impact the market and impact NVIDIA to the downside. So I think a lot of companies are trying to be a little bit cautious when it comes to their guidance. It's better to be able to under-promise and over-deliver. And I think that's kind of the trend that we are seeing in the marketplace right now. Also, just kind of keep in mind, Super Microcomputer also does work with AMD and NVIDIA, but they work more on the server side of the business, which has seen a little bit of a decline here when it comes to enterprise spending. So that also is potentially another reason why we saw the revenue miss compared to what the street's expectations were. I think right now we're just in uncharted territories. Give it a little bit of time, let the infrastructure get in place, and then that's when we're going to be able to see some of this top line growth, as well as it being, as well as it impacting overall earnings on a GAAP and non-GAAP adjusted basis.
And I think it speaks to the fact that you can mention AI in your company earnings all you want. You can say you're tagging onto the AI hype. To actually then spend the money and get there is a whole other story. So really interesting story today in Super Microcomputer. An interesting move higher on the year, though, even with today's pretty massive move to the downside. We'll leave it there. Kevin Green, senior markets correspondent for the network. And now it's time for FOMO. So I'd like to bring back in Alex. And we're discussing the sports gaming world, which I know you do know a bit more about myself in this world. I mean, just based on, I think, your experience. But I'm excited to talk about this because I initially saw this story when Dave Portnoy, who's, of course, the founder of Barstool Sports, issued an emergency press conference on Twitter. So this is one of those stories that I feel like people that don't even care about the stock market care about, which is why it's a great next-gen story, because this impacts, I mean, Barstool is like totally our demographic, and I'd say Penn and now DraftKings and FanDuel have marketed themselves so well to some of these younger adults. But this is a really interesting story because what has been framed as Dave Portnoy as like, I took back Barstool from Penn. If you actually read some of like the components of this deal,
oh what? Meg's waking up.
100% of his
4%.
Barstool Sports for $0.
Come on, baby.
This means now that if he
I didn't give up on you. Still got my calls.
Sports, Penn owns 50% of it. 50%. And that is the part of the headline that I was like, that is so important. It makes it seem like there's, obviously more
by
to
next
this
Friday.
deal. But then I think when looking at DraftKings today, it's down over 9%. What does this mean for a company like DraftKings, being that Penn is now partnering with ESPN? And I guess it depends your feelings on ESPN, because to me that seems like a pretty lucrative deal for them. ESPN gets more eyeballs on their sports book, but I'm really curious your thoughts.
Well, ESPN doesn't have a sports book until they branded now with Penn. But again, the issue to me is that the Penn technology just isn't that good. And this is objective. I mean, if you look at the experience on the Barstool Sportsbook that is going to be rebranded as Bet ESPN or ESPN Bet, unless it gets some massive overhaul, it is lagging its peers. It's not necessarily lagging its peers in the legacy space, the Caesars Entertainment, the BetMGM, those type of names. That experience is comparable. The Bet Rivers, the various names that you'll encounter in different jurisdictions. But the FanDuel and DraftKings, the names that kind of came to this space first from daily fantasy sports and kind of built the infrastructure before launching sports books, are light years ahead. And that's why they have, massive percentage market share, and they seem to be sort of in a two-horse race with one another. Barstool maintained a relatively comfortable, distant third, fourth, fifth place in that range that it was because it had that loyal demographic that you're describing where, are followers of that brand for its entertainment and content. ESPN has a lot of eyeballs maybe on it when a game is being broadcast on their network or you're in a place where SportsCenter is playing, but I'm not sure you're racing to download Bet ESPN because it has ESPN's name on it. I think that's the difference between a company like Barstool and a company like ESPN. ESPN is objectively bigger, objectively has more eyeballs on it in some cases and less in others, but Barstool was able to monetize their
Barbecue down
viewers,
1.6.
their fans, a lot more so than a company like
Give me
ESPN
down
and Disney has
3.5.
been relatively lately. So I think this reaction in DraftKings is maybe one that is overdone and is maybe one where people who don't really understand the space are reading headlines and thinking, oh, the big bad ESPN is coming in. But Fox just had to abandon their Fox Sports Bet. It's not that easy to get into this space.
Well, and as we know, ESPN has been losing money considerably for the last several years. In terms of eyeballs, I mentioned in terms of their unique visitors to their websites, which I know isn't necessarily the sports book, but ESPN does have 117 million unique visitors per month, whereas Barstool has 8 million. So in terms of just search traffic, ESPN definitely has a better hand here. But what's interesting now is all the Barstool sports books will convert to now this ESPN Penn sportsbook because Barstool is now legally not allowed to have its own sportsbook or advertise any sportsbook. So while Dave Portnoy has been really saying that now this company's back to their control, it has been this way in 10 years, I think that was more what they were after, but I think that's a really good way to spin the fact that you just lost any control of a sportsbook regarding Barstool Sports. So Penn, to me, really plays this as a winner,
Maybe
but
tomorrow.
Penn has been a loser for so long. It's like now they're just trying to then make up lost time to compete with the DraftKings. I agree with you that I don't think this necessarily has a huge competitive impact on a name like DraftKings, but today's move clearly is seeming like the street is reading this as a negative, and I agree. I think you read the headlines and think, oh, this is going to be a sports betting powerhouse. And then
I can get a nice pullback. I want to get back into calls for today.
This is a conversation I think that's
Otherwise, I'm
going
just
to
going to
take
let
too
it
long
melt
for this show,
up.
but we'll operate under the,
448.50.
assumption that the DraftKings reaction is overdone. Could be wrong, right? I mean, there's plenty of reasons to think that it could be, but we're going to operate under that assumption for FOMO. And look at a strategy that will take advantage of this recent move lower. This has been a stock that hasn't really moved lower much at all this year. Seemingly been day after day, quarter after quarter of successes for DraftKings. And so if you've been on the sidelines and missed this, maybe this is an opportunity to buy into this dip a little bit. Looking at selling a 1/2 put ratio in DraftKings below the market. Going out to September, we just got their earnings, and now we're getting a pretty steep correction in reaction to this news headline. What I looked at here for this illustration was buying one of the 27 strike and selling 2 of the 26 strikes, collecting about a 50% credit. So if it does stay above that, where all these options are out of the money, you simply would keep that credit as the risk profile will illustrate. But to me, this is more of a strategy where maybe you think this move will extend a little bit, and you're more interested in potentially owning these stock shares, but wanting to collect this premium in the event that the stock doesn't go lower. It's an omnidirectional strategy, so the best case scenario is actually a move right to 26. In that case, this can actually expand to a $150 profit. You keep the credit, and also that $1 wide debit spread can expand to a $100 additional profit as well. But most importantly, with that risk, the $24.50 in risk is, again, the risk profile will illustrate, that really reflects this stock going to zero, because the real risk of this particular strategy is that you would potentially be assigned 100 shares of stock, or essentially have the risk of 100 shares of stock, which is what a cash secured put is. So a little bit more capital intensive is a downside here, and of course a little bit more max loss sensitive. But again, that full 24.50 only something you would realize if this was fully at zero, essentially DraftKings going out of business and the stock no longer trading, would be the chance to reach that. But all points taken, Jenny, on this. I think it's a complex conversation, and it's one that I'm sure we'll come back to many times in the future coming weeks, months, and years.
You know, and I could talk about this story all day long. I found it so fascinating. Just the reaction on social media was so astounding that we have definitely had to discuss this for FOMO, and I'm sure we'll be covering more later on, but we'll leave it there for our FOMO segment. Now, coming up next, we will look at Yeti with earnings ahead still tomorrow morning. I believe we are seeing Yeti shares down about 0.5% today, but also lower on the year, so perhaps this could be a reprieve for Yeti. We'll discuss that more with Caroline Woods coming up next.
What am I? Still climbing up there. I only meant to sell one contractor there, but I sold all of them, which fine.
rare broad in-store sales, and then also heavy wholesale channel inventory and softer direct-to-consumer trends. So didn't realize that Yeti is now on sale, although I will
about
say,
a gap on
I do
GNS
have my
64.
Yeti. I use it all the time here. But I was just on vacation recently with
Up on run.
a 14-year-old,
Yeah, run's nice.
a 12-year-old, a 10-year-old,
Bounce nicely off that support.
and they were like, "You don't have a Stanley?" And I didn't.
I'm reducing
I
exposure
guess I
for
knew
CPI
what Stanleys
tomorrow.
were based on the look, but they thought I was very uncool.
Being long
for
on this
not
though, yeah, you could just
having
have a stop. It breaks.
And they're
Breaks
both,
that
these
level.
are all expensive products, which I
16,
can imagine is actually why we haven't
17,
seen the same
16
degree
and a half,
of growth
17.
in Yeti. But I mean, yeah, I'm definitely not cool, Caroline. I'll probably buy a Stanley Tumbler in like 10 years.
That's pretty nice. Pretty nice bounce there.
I can attest to they're amazing products. I wish I had like 100 of them. They're just not cheap. So that to me has always been the issue. Is just like if you could have a cabinet full of Yetis, that would be ideal. But they're expensive products, and right now with perhaps the consumer environment,
It's
just
coming
not
down there a
able
little
to
bit.
see the same
Barbecue down
levels of growth we once
2.3.
were. But we will leave it there. And great breakdown and some nice product placement for Yeti ahead of their earnings. Caroline Woods, senior markets correspondent for the network. So coming up next, now it's time for Under 30. We are looking at a name to end the show on a bright spot, Coupang, which is up almost 9% on the session on some stronger than expected second quarter results. We'll have those numbers for you coming up next.
Alright, just gotta open up a position for the Theta farm. Send it out to the members. On YouTube. Alright, here's a little SPY pullback. Have a kind of a bigger head and shoulders, inverse head and shoulders here. Little shoulder here, little shoulder being built here. Space is down 1.6. That little rally pre-market. Don't know what that was all about. Excuse me. GNS popping up a little bit there.
Really critical turn, and is now a company that can focus on kind of positive growth now for its shareholders as opposed to trying to prove its concept. Is that really the takeaway?
Well, I think so. I mean, the cash flow metrics are extremely important, especially for growth companies. And, you know, these growth companies are going to operate at losses, both on operating margin standpoint and also free cash flow is typically negative as they build out their businesses. But if you start to see free cash flow improve, ideally speaking, you like to see it continue at the same level or greater. That would be the objective as an investor. But at the same time, your profitability profile becomes a little bit more visible. And I think it's important here to note that because it gives you a little more confidence in the business's ability to essentially mitigate expenses, but also economize on sales. I mean, it wasn't
GNS
just the
almost to the
sales
highs again,
number
up
that was higher. It
19%.
was the number of active users. It was also the number of effectively or the revenue per active user. All of those metrics were positive, and that's also very meaningful in why
Yeah,
the
it runs
stock
up
is higher
4%.
today. But also year to date, it's done pretty well. That
Nice
31%.
bounce there.
The growth rate of the company is not tremendous.
SAFE's down
That's why I said
3.25.
earlier, there's tremendous opportunity for this company to expand its operations in either other horizontals, for instance, whatever that may be, to add additional services, but also vertically across multiple continents or different countries, particularly in Southeast Asia.
Right, George, we will leave it there. Great breakdown on a stock that we admittedly didn't know a whole lot about, making obviously a nice move higher today. We'll leave it there. George Tillis, senior markets correspondent for the network. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list with Nicole Petalides.
There. Barbecue down 2.5.
You are seeing technology under pressure while energy has been gaining, but for the most part, the down arrows continue, much like the month of August has been a down month. The S&P 500, 44.85, that's down 14, 1/3 of 1%. The Dow Jones Industrial Average down 65 points at 35,249. The Nasdaq 100 down 103, that's 0.7% basically, 15,169. And the small caps are down nearly 0.75%. This is we await CPI and PPI and Disney after the bell, for example. So there's been a lot of earnings as well that have really shown some of the action here on Wall Street as well. Bitcoin 29,575, US dollar 102.29, and gold 19.49 a troy ounce, down $10, while oil moves to the highest level since November of 2022. So oil, not right this moment, right now it is higher, but at one point did hit the highest level of the year and the highest point since last November.
Yeah, I just added
stories in the markets
added
right
some spy
now.
calls.
Caroline Woods is with me, senior markets correspondent here on the TD Ameritrade Network, and this is big news on gambling.
Final trade.
The partnership between Penn Entertainment and ESPN has Penn jumping, and this really is totally in a different phase. I mean, I don't think people really expected that from ESPN so fast, but I understand why. And DraftKings, now that's also another story here too, because that's taking a hit, right?
That's right. So obviously ESPN is owned by Disney. So Disney getting into sports betting, which there had been a lot of uncertainty if it actually would get into sports betting, given its very much family wholesome approach. But it is. It's partnering with
Family
Penn
wholesome.
in a $2 billion deal.
Disney?
So Penn will pay ESPN
Good one.
$1.5 billion in cash payments over a 10-year term, and then grant $500 million in warrants.
RAD down 10.5.
Penn will rebrand its U.S. sports betting portals, which are currently known as Barstool Sportsbooks, to ESPN Bet. The
The rebranding will take place this fall in 16 legalized betting states where Penn is already licensed. So this comes just, 6 months after Penn completed that $551 million acquisition of Barstool from Dave Portnoy. So he'll get that back in exchange for certain non-compete and other restrictive covenants. And you talked about the share price. Penn already off the earlier highs. We saw it as high as 16, 17%, now up about 11% in terms of the stock performance. I do want to note they also did report earnings this morning, beat on both the top and bottom line. Revenue grew about 3%, and they were pretty optimistic in terms of what this deal could mean for their business, saying it could add $500 million to $1 billion or more of annual long-term earnings. Analysts say that might be a little lofty, but we are seeing Disney shares under pressure. They were initially higher. They are lower. Obviously, they're reporting earnings today after the bell, so there could be some pressure because of that as well. And then DraftKings, a big competitor, is down about 10% on this news. Keep in mind, though, DraftKings is up about 150% year to date, so it's seen a huge run-up, much better performance than Penn has seen, but it is under pressure from this news.
Yeah, and look, Bob Iger making some changes. And he came on board, and we were saying that he just got more than he bargained for. I mean, he didn't realize that some of the things were as difficult to tackle, and that's why he's staying on board longer to do all that. And here's another idea that may work out for them.
And let's see if Disney does
climbing
decide
up there.
to keep ESPN assets, because it doesn't necessarily
Look
fit
for
into the brand.
448,
There is some speculation that this is
50
just gearing up
area
for a
to take
spin-off or a
profits.
sale.
Good
So
point.
a lot of question marks still.
Good point, and we'll listen for more on Disney later today. Upstart is a key name, and in this case, huge sell-off.
Much nicer when you get a good entry.
30% today.
Yeah, down about 34%. This is an AI lending platform, has really benefited from the AI wave, but reported earnings not so disappointing, but it's the outlook that's really sending shares lower today. Q2 adjusted earnings came in at 6 cents. Revenue, however, fell more than 40% to $135.8 million. But in terms of the outlook for Q3, the company said it expects revenue of about $140 million. The consensus, $155 million, so well below what Wall Street was expecting. Meanwhile, for Q3, they're expecting about $5 million in adjusted EBITDA. Analysts were looking for $9.6 million, so disappointment there, too. Upstart said it's dealing with an environment where banks continue to be super cautious about lending. Also, of course, they're dealing with higher rates, and they expect those challenges to continue and growth to continue to be constrained because of it. We did see some analyst commentary after this. Wedbush came out with its outperform rating, stuck with that $10 price target. The analyst said the economics of the business model remain under pressure and credit quality remains weak. Piper
Does TUP have earnings after hours?
did adjust its price target to $35.
They already have earnings.
That's basically in line with where it's trading right now. That analyst is looking for further signs of supply-side improvements, though he does commend the team on margins, product, and automation improvements. And then Jefferies cut to 46 from 60, so 46 is at least higher than where it's currently trading, saying Upstart's
TUP's
moving
after
in the right
hours.
direction, but we remain wary of margin and growth factors given macro uncertainty and point to a valuation that is hard to justify. So some mixed analyst commentary there. Only one buy rating on the street for this name at this point. But it has been a big winner this year, up about 160% year to date. But today is giving up some of those gains, down about 35%.
Yeah, it's a tough one because it was really exciting. I mean, at one point it got up to $400 and in 2022. And look what's been going on now. It's at $34. So it hasn't really made some shareholders happy.
Give it bad outlook, and that's all it takes for investors to sell.
Understood. Thank you so much,
Thought they were
Caroline
pre-market for some
Woods.
reason.
All right, let's take a look at the bigger picture. Alan E. Becker's with us, CEO and investment advisor, representative of Retirement Solutions Group and RSG Investments. Thank you so much for being with us. We'll be getting some key prints on inflation, CPI, PPI. What are you thinking big picture here?
Well, Nicole, thanks for having me. Obviously, inflation affects everything. We see that inflation's on the rise. I know you were talking earlier about gas prices hitting some all-time highs. Some of that would be obviously a bump over the summer, but I think we're seeing a lot of people out there traveling, enjoying life, and gas affects everything. It's going to affect, what it costs to ship stuff, what it costs to produce things. So we all have to be prepared for what inflation is going to bring us. And like you said, we're going to have CPI coming out later this week, so that'll help us get a better picture.
Understood. Let's just start with some of the things that consumers are battling. I mean, there's no doubt that they're tapping into the savings, the 401ks, the credit card debt, more than $1 trillion. That's a first in credit card debt. Are you worried?
Slightly. I mean, I've traveled a bit over these last few months, and the airports, everything is packed. So people are spending money, I believe, that they don't have. They're putting it on their credit cards. Reality is going to have to set in. So yeah, I think when we start seeing those high interest credit card debts come in, and people are still trying to pay
still waiting for that
bills,
GNS
we're
sell-off,
seeing
huh?
things like going to a 401k. I mean, 401k is supposed to be that later money. Forget about it. Let's get to retirement. Let's take that money off, keep it off the table so that we have something for the future. So many people are accessing
long
it
puts
now,
on
and
top
if they
for
lose their
earnings.
job, they may not be able to take advantage of the loans.
I don't know. I'll just leave it
limits
alone.
how much they
Heavy's
can borrow,
crazy.
and the cost a lot of times isn't worth it. So we're telling our clients, look at other opportunities. Do you have cash value life insurance that maybe could bridge a gap? Could you take some more out of savings? So always remember, pay yourself first, and don't forget the big picture, which is hopefully retirement happens one day and you're going to need those funds.
Yeah, and when you talk about inflation, I mean, as we said, 401k hardship withdrawals are up. We saw that piece of news as well. What about gasoline prices? I mean, it's just the basics of what people are facing, right? I mean, you're seeing those creep back higher again, and the Fed may raise rates one more time, right? Or two.
Claiming.
Yeah, I mean, I could see definitely around that September timeframe looking at one more, but as we round the corner and we start looking at the political landscape, as people go to the polls, none of the candidates are able to think that there's problems at the pump and in their bank account. So we may not see rates keep going up next year. That's my guesstimate on it, because you want people happy when they go to the pumps. But the credit card debts, the vacation spending, inflation, all of this coming together, what I really want to think people need to look at is the delta of the risk of what they're trying to do. And that's a new world, because with our clients, we want them investing to typically a strategy that's going to get them to and through retirement, right? So if you're looking at safe vehicles, I'm talking about anything from even CDs, which we wouldn't have talked about years ago, right? Some fixed annuities, things like that might be alternatives for people to take a look at, because you can lock into those safer potential interest rates for a longer period of time, so that when rates do start coming back down, you still have some of those higher rates. And if the money was good at 2% or even 1%, how much better is it to get some of that fixed rate at 5% or better?
Right, understood. So at this point now, when you're talking to clients, you were talking about, retirement, or looking for, there's the growth type of investment, and then something that may be a little more cautious or hedged, right? What do you tell them at this point?
So we're a big believer of using the insurance world and the securities world as a nice balance. So if we're talking on the securities side, we're definitely talking about managed portfolios, staying the course. I like to look at, I was in the Navy, so you go out on a ship, the waters can get a little turbulent, right? But it doesn't mean your ship's going to sink. So we might see some roughness going down around in the upcoming months, if not through to the next election. But stay the course. Don't leave the emotion out of it if you can, and stay true to what you're trying to do. Is really the advice that I'm staying with. And then that safer money, let's look at other alternatives where we can lock in for longer terms. I think too many of consumers are looking at banks and things like that and going, oh, I can get 5% on, say, a 10-month CD. Well, that was an annual percentage rate, so it's really less than that on the interest rate, and they're really trying to lock you in at a lower rate, when rates will probably go down in the future, and you'll wish you had locked into those higher rates.
Still
so
rallying.
We're also having that conversation about take the longer term on the
It's crazy, the late day daily contracts, how quick they move. Things are up 50% from right here.
The final is that you
hardly
are
move.
preparing for some more volatility. We had been hovering in the 13 range on the VIX, and those were some low levels we hadn't seen. We've been creeping higher, 15, 16. So you preparing for more volatility, and where do you see stocks by the end of the year?
Absolutely preparing for volatility. I think we're seeing some of it right now. Some
Be
of
more
the
decisive and take profits
gains
quicker
are
though in the day,
giving them
because
back.
when it's
But
up, swings
always
down just as
opportunity.
fast.
I think it's just, watching the landscape, seeing where the different parties are directing. So you'll see some effect of that, and just watching spending in general. Being realistic, we've seen a lot more people wanting to go back into the office working. So, just really taking a strategic approach of everything that's going on in the world and trying to make your investments go that direction if you're going to pick individual stocks. Otherwise, stay with a managed portfolio where you're very diversified, you've got lots of different sectors, and that way you should be able to weather any storm and make it through to your retirement. Because a lot of this stuff is dips. I mean, we talk about this all the time on TV, radio, etc. But you take out the time, a lot of it stretches out. So that's why I'm saying stay to the course.
Alan Becker, thank you so much. Retirement Solutions Group and RSG Investments. Thank you. And later this hour, CFO of Symbotic joins us to talk about the record revenue that the company has seen. The stock value also has been on the rise, more than tripling.
I mean, we really have time. Only 2:15. We could build this cup, build a handle, we'll make it back even at pre-market highs.
McKenzie, our panel, ready to talk.
I feel like we'll probably close around here though.
Fresh earnings, names like Wendy's, Jack in the Box, and more. And up next, DeFi Stewards Stephen Larson joining us with 3 stocks he is watching and what to make of PayPal's new stable coin offering. We'll talk more about that coming up.
Mirror. GNS holding above VWAP. GME not getting the bounce up with SPY. No such luck. Barbecue down 1 1/4. Safe down 3%. This one has earnings coming up too. TUP's down 8.5. They have earnings after hours. RAD's down 10.6. Dish is down 0.3.
Showed losses widening. Bookings for the site were up, still short of estimates. And the upside here, Axon Enterprise seeing its strongest gains
today
since
is
2020 and is on the top winner of the
so
S&P
far
500 today.
looking like
It's
a
after
repeated
topping
yesterday.
the
See if we get a handle and a rip.
It's maker of
like we did yesterday.
tasers and body-worn cameras also increased its
That would be
guidance,
neat.
citing wide interest in its newest technology. And then there's Celsius Holdings. Shares are energized after the energy drink maker reported strong beats on the top and bottom line. Year-over-year revenue more than doubled. The company noted it's further leveraging its partnership with PepsiCo and will welcome Celsius' CEO to the watch list to talk about what's ahead. And Bitcoin, let's check it out right now. Bitcoin, 29,555, down 1.7%. All right, for some more names on the radar, Steve Larson, founder of DeFi Stored. Good to see you. Thank you so much for being here. Let's talk about a few names that you're watching closely. And maybe before I get to the actual names, it's Coinbase, Palantir, and PayPal. I just wanted to get some themes. Are you looking for certain themes when you look at some companies?
Yeah, well, I think there's two themes that everybody's keeping an eye on right now, certainly in what I do. And that is one, innovations out there in crypto and the blockchain, and two, AI. And in a lot of places, those overlap, and that's what's most interesting. But that's where we see the movement, and that's where I spend my time. So Coinbase is one that I'm always watching and always have my eye on, it seems like.
Right, understood. All right, so let's start with Coinbase. I wanted to talk more about this. I mean, delve into this one. Why does it jump out at you?
Yeah, so Coinbase has been on a great run as far as year to date. It nearly tripled at one point from where it started the year at, hit a high of about 110. Now it's come back down over the last 3 weeks or so. But Coinbase, for example, they're very confident in their business model because they're interested in buying back up to $150 million of their debt. Now, this is high yield debt that they pay about 12% on. Right now, it's trading at a discount. And not only has their stock price rallied on the year, so has their revenue. And so they have some free cash now to buy back some of that debt, and they think it's a good opportunity. So I think that really signals some strength as far as where the management sees the revenue coming from and what it's going to look like coming up here. The other part about Coinbase, I think, to notice, obviously there's all the regulatory things going on, but they also just announced the launch of their first blockchain, Base. So Base is what's called a layer 2 on Ethereum. It's something that's built on top of the Ethereum blockchain. And they have opened it up. So they're putting the horsepower behind building it, the development power, but they're opening it up to developers and really to anybody to build on top of it. So they're kind of providing as a public good in a certain way. And so this really signifies Coinbase's commitment to the decentralized space and to the broader ecosystem. So everybody's watching the launch of Base very closely to see how it does.
And it's amazing because year to date it is up 140%. But, you know, we think about crypto and we think about some of the uncertainties. But as you noted, with blockchain, the blockchain, that could be a fix, according to the Wall Street Journal, too. That was a question they were asking, too. I mean, when you see it at $85 when the recent high was 114, how quickly do you think it can move up? Over what period of time are you watching?
Yeah, I mean, I'm really looking towards the end of the year. So we're going to have a couple more earnings announcements from Coinbase, but really we should see the success, what I think is the success, but the results of the launch of the Base blockchain.
Closing a little bit
and
here.
what that might mean for future revenue for Coinbase and bringing new users on and who builds
Things are up
on there.
100%
I'm
from
really
here. It's
looking
crazy
at the
what
next
late day does.
3 to 4 months to see what happens,
There's a
see
small
the growth
move.
of that, and then also their international user growth as well, which continues to be strong.
Up next, Palantir, which is to the downside today and also came off a recent high of $20, has pulled back some. We've been hearing from the company of late, worse than expected revenue issued its guidance. It's down about 8% today at $15 and change. Where do you think this one's headed, and what could drive a name like Palantir?
Well, we'll see where it's headed. It's really interesting because it was up as high as 200% on the year, which is obviously a great run for any stock, and now it's just gotten hammered the last couple of days, despite pretty good, earnings announcements and revenue announcements. So up about $200 million over Q2 last year, and then also the consensus estimate is about $550 million in revenue for Q3. So some of these sales numbers are strong, but what's interesting is that they just launched their new AI platform. AIP, which stands for Artificial Intelligence Platform, very creatively named by them, and to great fanfare. They're live with clients.
They've
They
got a
have
handle now.
huge backlog of customers that are interested in it. but they keep getting hammered.
I can't
Their
buy
stock
back in,
price
so I'll
does.
just
So I
ride
thought
him.
this is interesting because typically we're reading and watching about things that are involved with AI that just turn to gold. Everything AI touches turns to gold, and that's not necessarily the case.
Just
So
the
here's a
stock
great
price.
company like Palantir. They launched their new AIP, their AI platform seems to be successful, but they continue to get hammered. So personally, I think the demand is there and the revenue strength is there, and I think the stock price will likely rally. But it's interesting that it took such a hard hit on the heels of an AI announcement.
Yes. Continue. Broken. Broken. I didn't like that. Nope. Try and get it back up. GME hit VWAP and rejected. Down 3.5. Like RAD might be About to start making its way back up. GNS still hanging around above VWAP.
We just reported our fourth company as a public company, fourth full quarter. And the results were strong again. We continue to be driving very strong top line growth, seeing strong operating leverage. And what's transpired over these 4 quarters is not only is that growth coming in strong, but we're exceeding our ability to move faster with customers. This most recent quarter, we're now deploying 33 systems with our customers. That's up from just 9 when we spoke to you last a year ago at our public listing. So some tremendous growth, I think, is the story.
Yeah, it's pretty amazing as you've been doing this. Tell me more about, you have these great client relationships too, and how important that is to driving and meeting the goals that you're setting.
I think that's right, Nicole. We're very privileged to be working with some of the most sophisticated and demanding customers around the globe, such as Walmart, Albertsons, Target, United Natural Foods, just to
Oh man, I don't know if that's my internet or I'm moving up more there. Might not need a handle. Too soon to tell. It's still kind of in that range. Oh yeah, my internet. Wait. How to close one of these contracts. Just one.
Case and get the exact right case out for exactly when it's needed,
Still here.
exactly the right place with industry breakthrough accuracy. So we're doing that now on a mass basis. We're just about 2.5 years really into ramping our mass production of systems, where we've gone from being a company that effectively developed one system at a time as we were developing an R&D capability for these products. Now we're deploying them by 33 systems at a time and looking to grow that number even bigger.
This video is tell-all. It is unbelievable to watch how, and we think about manufacturing plants and moving and getting those boxes out, and now you're talking about 2 football fields worth of bots and lifts and things that just get it all done, and they probably can work longer hours and not need breaks, right? I mean, really, do they work 24/7?
Such a nice day for trading on SPY. So kind to us. Dude.
Receive fewer stockouts at a lower cost. Get the product they want when they want it at a lower cost.
Yeah. Well, What do you tell the analysts who are pulling
All right,
back
close
a little bit?
another one for the Theta Farm.
I
Sent to
see
the
some,
Theta Farm YouTube members.
Citi maintained
Just trying
a buy,
to reduce
right?
some risk.
And they have a $61
The 50%
target.
gainer, so
But I
that's
see
my
some
trigger
other
anyways.
ones that are pulling back a little bit. What is it that they're worried about, and what do you tell them?
Well, I think if we look at some of the analyst reports, the stock, I believe, is up about almost 300% 6 months.
Yeah, that's right.
So the analysts are trying to react to a stock that seems to be performing quite well. So we get a lot of encouragement about what we're doing and the excitement, and we're watching some people move their price targets ahead, and some people move their price targets consistent.
Right.
So, I think what we focus on with analysts is we're focused on building a really big company. We see this as a massive market, and our goal is to make sure that we're maximizing that opportunity and return for shareholders. And like we tell employees, we don't watch the stock on a daily basis. We're out there just to create that value, and we know the stock will take care of itself.
And look, I mean, 275% basically this year. They probably are concerned about valuation and the run-up that they've seen. Tell me about growing the AI, pipeline. I mean, you must have endless ways to have these built and made. And is this a global story for you?
It very much is, and data and intelligence is core to what we do. So I described our system as football fields big in terms of robots, but what really makes it work is the intelligence of the platform. So governing all of those robots is a smart software system, including dozens of different optimization algorithms and artificial intelligence routines that process on an individual site 6 terabytes of data per day. So that data is a virtuous cycle. It feeds the performance of the system. You gain daily learnings. The system self-learns and gets smarter with each iterative release of the software system we have control it, which raises performance, which increases customer value and just feeds on itself. Intelligence is the key to what we do.
Right. And you mentioned that you launched Greenbox at the top, and that's another big portion of the growth story for you as well. Tom Ernst, great to see you.
Down
Congratulations again, Chief Financial Officer at
GME
Symbotic.
down 3.5. GNS hanging
Still
out
ahead in
there.
the second half of our show, we're talking
RAD down
about retirement
10.6.
planning and ways to position yourself to
Fish
handle
is
all
flat.
loss. As we head to break, take a look at winners and losers in the S&P 500.
Excuse me. Error? See, Mullen gave up those gains, down 2.3. Ah, we suck again. The theta decay on these dailies now is getting somewhat noticeable. Even though they're in the money. Runs up 3-3. Teladoc's down 3-3.
A little more, though, is at play with some of the pullback than just profit taking at this point. We have heard some more, I'd say, analysts now covering Apple suggest that some more sluggish economies in the U.S. as well as China could continue to weigh on Apple now into 2024, and its latest earnings may have only fanned some of those broader flames. We saw iPhone, Mac, and iPhone sales year over year falling in their most recently reported quarter. Sales fell in Apple's Americas, Japan, and the rest of their Asia geographic segments.
Asia.
And what continues to concern a lot of these investors is their performance on a geographic basis continues to highlight the challenges in Apple's more developed markets, which are really key to their overall growth. They did also give more guidance on a modest year-over-year revenue decline, and the street was banking on a slight growth in this most recent quarter. So that's, I think, attributing to a lot of the weakness we've seen in Apple. We continue to see them dealing with an uncertain macro environment, and Apple is always seen as the resilient player. So it just goes to show not every company can be resilient in this current environment. Amid the lackluster August we've seen thus far, shares are down about 1.5% week to date here, still up 38% on the year. It's still been a pretty banner year for Apple, all things considered, but with the overall market starting to ease up, we also are seeing Apple, I mean, it's lower, but it's continuing to just trickle off those intraday lows slowly.
Yeah, I mean, it's an incredible. It became the first one to cross 1 trillion, then hit 2 trillion, August of 2020. You mentioned the 3 trillion, which was so exciting in January of 2022. So, I mean, there's no doubt it has been a formidable player. But as you noted, a lot of these tech names that ran up are taking a breather, and Apple is certainly doing the same. Thank you so much, Jenny Horn. Good look there at a name that everybody owns in many ways. Thank you. Now it's time to focus on your portfolio, folks. Cherise McKenzie's with us, President and CEO at Saturn Wealth. Thank you for being with us. So we were just talking about some of these great names, great companies, but they're pulling back. I mean, we're seeing that a lot. You know, we talked about the Magnificent Seven pulling back, right?
Yeah, it's definitely still a volatile market. So we're just encouraging people to get a sense of what they have and make sure they're diversified and aware of how much risk they're taking to make sure that they're really on track to accomplish the goals that they're trying to achieve.
When they ask you about some of these great names, like NVIDIA's up 200, you know, Tesla's up 100, Meta's up 100%. I mean, there's been some great movers. What do you do when they ask about some of these current big high flyers?
Yeah, there always are those conversations. And we tend to believe more in diversified portfolios. We don't really like to try to pick the hot new stock. We want to have a long-term plan with lots of different holdings in there. So typically, if someone is really interested in something, we'll have them open their own account and do that on the retail side so that they can be responsible for that decision, and we can stay on task with what we want to do with their portfolio management.
Right, and look, you're trying to make them not lose money and really preserve that principle when you're doing retirement planning. What are some strategies for that?
Well, having an understanding of how much risk you're taking and how much you're comfortable with losing is really a key part to everything when we're doing our planning, because it's different for everybody. Some people would be really uncomfortable losing anything. Other people can stand to lose 10, 20, 30%, and it's not really going to affect them. So really having an understanding of that,
pull back to the bottom of the shoulder
what
over here,
risk you're comfortable with,
448.
and what your time horizon is, and what your goals are to really formulate a well-developed plan.
Also be a bit of a handle.
What would you say? You said knowing
About an hour and 15
you
minutes
gotta know
left.
your risk tolerance, and there are some
No
people
reason
who
to
don't want
overtrade
to lose
here.
a penny, and others who are willing to lose some. How do you be most conservative for the most conservative investors?
So every
It might not come
portfolio has
today,
different
poison.
levels of risk. So we do a lot of different quizzes and things like that to really kind of iron out and figure out what they're comfortable with, and then we design their portfolio around that. So, some of our portfolios only take a quarter of the risk of the market and are designed more for income purposes. Other ones are more aggressive if people, have multiple different accounts in place for themselves. Maybe they have a pension that's going to give them the income they need in retirement. Everyone's situation is a little bit different, but we just really try to personalize it to make sure that they're taking the amount of risk that they're comfortable taking, and then we design the portfolio around that as a result.
And I'm sure you have a mixture of equities and bonds and international, small cap and large cap. I have to assume that that's how you do it. Tell me if that's not the case. Also, you're watching everything that happens here in the markets, right? We're waiting on some inflation prints. You may have a Fed that could raise rates again. What do you think of that?
Yeah, I mean, there's so many different economic indicators that drive the market, and we really just keep a close eye on everything to figure out the best course of action going forward. But we are expecting continued volatility just because of everything that's been happening lately, politically and economically.
Do you dabble in crypto at all, or not so much?
We don't. We're very regulated with our licensure, so it's just not regulated enough for us to be able to use it. But we do have clients that want to do that on their own, and we encourage them to do that on their own, knowing that they have the responsibility for that.
And Charisse, what made you interested in this field in the first place?
I was actually a social worker for 10 years, and then I was trying to figure out what else I could do to help people, but just in a different capacity. So back when I started in this industry, I actually answered an ad in the paper, and that's how I kind of ended up getting my foot in the door. So don't see that much anymore with people.
Yeah, no, it's great. Thank you so much for being with us. A good look at how to protect your portfolio for the long term and prep for retirement. Charisse McKenzie, thank you so much, of Saturn Wealth. Thank you. Still ahead, we bring in our panel to discuss fast food. We've had some fresh earnings from names like Wendy's and Jack in the Box. We'll talk about a lot of these names coming up.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the Income Investing course and a whole lot more.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience that pushes you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Let's walk through how to analyze a company's financials on Thinkorswim. To get started, go to the Analyze tab and select Fundamentals. Enter a symbol, then select Enter. To download detailed analyst reports, select Download. By the Numbers provides balance sheet information and other fundamental data. Company Details provides summary takeaways on key metrics and what drives the stock. Takes a more numeric look at similar information. If you find any of the information particularly helpful, you can print it out or take a screenshot. For more demos on how to Thinkorswim, head to the Education Center on tdameritrade.com.
Watchlist can help you keep track of securities you're interested in. To add a watch
For all of you that were hyped about BBBYQ's new website, it's coming soon. Well, it's here. Overstock made a new website. Or maybe they didn't do much. Welcome to a bigger, better beyond. GNS holding up 15%. SNMP is halted. Halted the downside. Weird. The way that thing started to take off and then a quick reverse. Buy's just chopping around up here. We'll have a couple little contracts in case we get a handle on a breakout. Barbecue down 3.27% at $23.99. Slowly breaking through this neckline. Got potential support at 23.27 area. A little bit further.
But we still have at least 0.5% to go for the most part. Watching the NASDAQ very closely in particular as we've lost a lot of those big leaders. Good show coming up, earnings this afternoon. Not the big giants anymore, we've moved on from that, but some fun names and some important names too that do have the capacity to move markets like we saw for some of the secondary cloud names the last few days. That sector of growth tech has just been having trouble really keeping up the momentum. We're not unwinding, we're not crashing by any means, but we certainly have changed the tempo dramatically over the last 10 days of trading. Dow oftentimes is the closest to positive on the weekdays that we've had. Outperformance by some of the value and bigger names certainly reflects a little bit of that rotation that we've had in the market. Catch is that the rotation hasn't been quite enough to carry the market as the S&P 500 year-to-date high goes back 2 Thursdays ago. So next Thursday, tomorrow, will be now 3 weeks in a row here where we've had a little bit of diciness in the market. And the 27th, so 2 weeks actually. And that was when we had GDP data come in hot. We had a bunch of economic data that beat expectations. Market really hasn't been the same since then. This shows up pretty well if you look at the VIX, especially if you look at the VIX next to the 10-year yield. That's the first chart I want to get to here. As volatility is today actually down a little bit, but it has been rising. VIX going back to the 27th shows a pretty clear bottom around the same time as it yields bottomed out. So now we see them moving in tandem. And that really, I think, just is kind of the best all-encompassing explanation for the bear case right now, which is bonds are creating some problems again. As you can see, though, the 10-year index here, TNX, so your y-axis over there, you have to divide by 10 to get the yield. So just to look at the index for the 10-year Treasury, drifting a little lower as VIX drifts lower the past couple days. But here's the thing is that yields are generally catching a bid, bonds selling off when they start strong. Today being another example where the 10-year futures have softened up throughout the day. By the way, also not a lot of volatility around the 10-year auction, and we are watching those pretty carefully right now. It'll be telling to see how the market responds to the deluge of issuance that's coming down the pike from the Treasury. So far, this has generally been an economic story. Harder to argue it's been a supply story for the bond market. It's mostly been a demand story as the economic data has beat expectations. Employment has remained pretty firm. But now we're also seeing some pretty good evidence that wage debates and unionization is winning out in favor of the workers. We're going to talk about a few of those big stories up here at the top of the show. Bonds on the day, little change. Your 10-year future right there, unch. But we're still to yield about 4%. So just a little bit of a snooze before tomorrow's inflation print. Bonds are going to wake up, most likely, no matter what that number comes in as tomorrow. Because think about it. If it comes in hot, we've already got the momentum behind the bond market here selling off, and that's going to create some volatility. If it comes in super light, then all of a sudden bulls have their bull case back, and we probably get a big reversal of the move higher in yields. And if it's neutral, well, the neutral state right now has been for the economy to beat expectations, and so we can probably continue to see some of that rotation in the market. Tomorrow should be a pretty big day. Now, even though there's a bounce happening throughout the session here, it's hard for bulls to get too excited because NVIDIA is still down. You've also got leadership coming from energy and the anti-beta cohort. So that's like the opposite of what happened throughout the last 9 to 10 months of the rally. The high beta stuff was leading the way. You had some reopen trades in there, but you had a lot of tech as well. So that fund, BTAL, the anti-beta fund, is literally the opposite of all that stuff. The fact that that's up 90 bips today tells you this is a little more like kind of a safety rally, a shift, maybe rotation, you could say that, because energy stocks are doing quite well. But a lot of that is also connected to inflation and potentially problematic as well if crude oil keeps on going the way it is right now. Man, it is going. Crude's not messing around. However, if you've been tuning in for the last 2 weeks, crude oil has taken a much more prominent role in the coverage here, especially in the afternoon show, especially with the futures host Ben when he's on talking with us. When we talk with Bob Iacchino, we've been watching this chart like hawks, quite literally, because the rally in crude now is extending past some points of potential resistance. It's looking very strong, and that could be a major problem for the deflation narrative if it keeps going the way it is right now. So that means tomorrow's obviously important, but every day is important. And just a little reminder that, again, the tech stuff that was saving this market and carrying it on its back just is not catching any bid. And again, it's not alarming, but the fact that a bunch of the major mega cap winners all peaked around the same time, which was basically the first earnings from Netflix and Tesla, that goes back to the 17th. So the S&P 500 peaked on the 27th of July, 2 Thursdays ago, on the good economic data. The NASDAQ peaked almost 20 days ago. This is a 20-day chart when Tesla and Netflix earnings came out. It's important to keep those two forces separate because they basically are the main forces of the bull market that are just looking a little bit tired right now. Let's go to Caroline Woods at the New York Stock Exchange. Let's talk about that labor situation because with inflation tomorrow, Caroline, energy prices rising.
Not sure if we'll get a
suddenly some of the
handle on
strikes
bounce today or
and
not.
the worker
I dig 'em pretty deep
employer
here.
conflicts become a lot more
BBBYQ
interesting in the
bounce.
context of inflation. UPS is the highlight with drivers getting a pretty solid salary bump.
Hey there, Oliver. Yes, looks like UPS will actually avoid that strike. In the initial vote, there was 161 to 1 vote for the deal from the Teamsters. So looks like that should be averted. Obviously, there's until August 22nd to actually ratify that deal. But taking a look at UPS shares, they're off only modestly right now. Of course, reported earnings yesterday for what it called a challenging quarter. Revenue failed to impress, also lowered guidance for the third quarter as volumes were impacted by those labor negotiations. And now analysts are weighing in. We've seen price targets moving in both directions. They did get UPS did get two downgrades. Loop Capital downgraded it to hold from buy with a price target of 195, down from 210. Well, UPS currently trading around 180, so still about $15 upside from where it's currently trading. But the analyst there says UPS expects to ratify the new contract in the coming weeks, and it will reevaluate its rating based on the cost impact of the deal. Obviously, that's the big question. How much is this actually going to cost UPS? Meanwhile, UBS also downgraded UPS to neutral from buy with a $185 price target. That's down from $198. The analyst says the company's path to margin improvement is unclear, and that the combination of a greater than expected decline in domestic package volumes and visibility to significant year-one Teamster contract costs create a backdrop of pressure on UPS's domestic package margin, which is likely to extend until the second quarter of 2024. So concerns about margins. In terms about price target action, it's all over the place. Bernstein cut to 221 with an outperform rating. Oppenheimer hiked to 195, also outperform in the neutral camp. JP Morgan raised to 186. Barclays raised to 180. Credit Suisse lowered to 194 from 204. So now if you take a look, the median price target for UPS around 192. And as I said, trading around 180. So still some upside. A few more hold ratings than buy now. There's 14 buy, 16 holds, and 2 sells.
Barbecue selling off there.
Some
down
limited
5%.
upside, but still some upside according to the majority of Wall Street analysts.
Okay. So it's not making a huge disruption for this stock right now, which is probably a fairly good message about the company's ability to, handle that to change to their margin. I know some of the analysts are casting some doubt on that, to your point, but market's kind of okay with that right now. So ultimately, price more important than sell-side analyst commentary. A couple weekdays, though, prior to this, something to keep in mind as now we see this in a lot of different sectors. We've still got the actor and writer strike going on. And then if we go way, way, way on the other side of the world, this is actually also happening in the energy category in Australia. And apparently, I'm reading from a couple articles, that's what some of these news outlets are using to justify the crude oil move today.
Yeah, you mentioned crude oil being up about 1.6%, but take a look at nat gas. It's up 6.5%, and over in Europe, it was almost 30% higher, topping €40 for the first time since June on news of this potential workers' strike in Australia. Workers at Chevron and Woodside Energy Group facilities in Australia voted to strike. The exact timing, if they do, in fact, actually strike, is unclear. But the Australian Financial Review reported that laborers could stop with 7 days' notice as early as next week, depending on progress at a meeting today. Clearly, some market jitters of potential supply the meeting's tomorrow, Thursday. There's obviously clearly the market jitters of potential supply disruptions. And I will say, I was looking through some analyst commentary, not so much impacting here, but potentially impacting Asia and then in turn Europe. RBC said collectively monthly exports from the facilities equate to around 11% of exports globally. They're warning of a possible supply squeeze despite healthy gas storage levels in Europe and elsewhere, saying roughly 3/4 of Australia's LNG exports go to the big four Asian buyers, China, Japan, South Korea, and India, and none to Europe. But it could potentially push the prices higher, and then European gas prices in another potential price war with the Chinese or the Asian prices. So definitely seems like there could be some ramifications there. I saw a quote from Citi: an actual strike at 2 major LNG export terminals in Australia would have far-reaching impacts. So, definitely something to keep an eye on, and could be the reason behind the crude oil move. But definitely, if you see nat gas popping today, here's a reason that it could be why.
Almost feels like, for different reasons, but timing-wise, close to a little bit of throwback to this time last year when natty gas was going wild into the late summer, fall, same type of energy concerns. Last time it was wildly overblown, over-discussed, and ended up with the huge natty gas crash for like 6 months straight. So I think we got to take it with a little bit of grain of salt, but that was different, right? That was like weather and other stuff. This is more like labor and employment oriented, possibly. So anything that's going to put commodity prices back on the map is going to get us focused in on inflation. So thanks for running us through it, Caroline Woods, our senior markets correspondent from the New York Stock Exchange. Let's continue the discussion with Sarat Sethi, joining us from Douglas C. Lane Associates. He's managing partner and portfolio manager. Sarat, welcome to the show. Thanks for being on the TD Ameritrade Network.
Thank you for having me.
Our big debate here as investors and traders, analysts over the last 4 months seems to be what the bigger risk is, inflation or recession. Can we make it that binary, and where do you land if it is?
Fortunately.
More inflation. I think investors are underestimating the impact of inflation that we have on our system.
We didn't pull back that
I think you were just talking about it with UPS. I mean, when you start getting wages going up, it's very hard for them to go back down. And don't forget, we still have wages to go with the autos. We know the airlines raise wages.
But there always is 10 minutes of Fugazi.
Permeates through the economy. And I think for investors to think, hey, interest rate's going to come down, inflation is going to come down, it's going to be a longer time before we really see that. And with that, valuations need to reflect it, and we just don't see that yet. That hasn't been really reflected in the market.
So valuations in the stock market have come up a lot off the lows October last year, but are still substantially below where they were during COVID. Do we blame that on bonds? Do we blame that on the Fed? Basically, just people a little less generous with valuations when rates have moved 500 bips?
When rates move 500 bits, you have other alternatives.
This is a handle that's 38.2 and made it.
Bonds, high yield. There are other alternatives, and I think people are expecting, especially, we talk about the big seven, but there is a multiple expansion there in the market. So I do think you got to look at areas like healthcare, certain financials, consumer staples, utilities, where I think there's a lot more value, and really we haven't seen that yet. And I don't know what it's going to take, but those are places that I think you could actually make money over time.
So the value cohort sounds like the appealing part of the market. Then does that also equate to a short of the big tech stuff, or do you just kind of let that simmer and do what it will?
I think you let it simmer and do it as well. It's very hard to short the big tech, and I think what needs to happen there is rotating money out of there into some of the other sectors. You've seen a little bit of it now with Apple and Microsoft kind of coming down. Will still be interesting to see what Nvidia has earnings too. And I mean, we own some of these stocks, but we just don't own them in the size that the market has. So I think in a diversified portfolio, you do need to look for opportunities elsewhere. And I think that's where investors have missed out, and kind of the barbell strategy of growth and fixed income. You also need some diversification into value in there.
What about the old 60-40 that got shredded last year? Sarat, is that at risk still because it's bounced back real hard? But now if inflation's the biggest risk, do we run a possibility of a 2022 redux?
So I do think it's a good question. The 60-40, when you go to the fixed income now, you're getting yields. If you can ladder your yields and just take individual bonds, I don't think you're going to get hurt as long as you hold them to maturity. The question is duration and credit risk. So make sure that your duration is short enough. You do not need to get through 2 cycles on it. Just 1 cycle is enough. And I think you can actually make money on that, at least if you're looking for yield to maturity.
Okay. Sarat, looking over the next couple of weeks here, we've got an inflation print. We got Jackson Hole. Is this where our focus should be? Is there a potential for Powell to go back to the hawk he was at the last Jackson Hole? Because he sure seems to have softened up this year.
Yeah, look, and I think that's where the market's really going to key on. Most of earnings have already gone, so we're going to have a little bit of a quiet period. What you need to then focus on is where is the Fed going to go? I think if the Fed says, hey, we're going to stay this way and potentially raise rates, I think the market will be okay. If he gets hawkish, that's going to be bad for the market. But if he also says we might need to cut, I think that's going to be really bad, because cutting means they're seeing something that none of us are seeing, which is a recession. Kind of the question you asked initially, is inflation a recession? But if you start getting cuts, then I think recession starts playing in, and the whole ball game then changes again.
Market still has some hope that those cuts, I mean, the market describes it as hope. To your point, I feel like we shouldn't describe cuts as hope, but stocks, through that lens, love the idea of cuts. And bond market still has a little lingering possibility of that coming up in the next 6 months. Is
I'm not sure about this.
Going to get blown out by the Fed?
Building a head and
I
shoulders
do
here.
think so. I think if you start seeing rates go down, it's not going to be for good reasons, especially if you see inflation where it is. So we need to see that indicator, and you also kind of see more flattening of the curve. And I think getting some certainty in this would be a lot better. But if we don't, I think you're going to see some more volatility in the next few weeks.
Okay. To come back full circle here before we let you go, back to the action. You mentioned the value trade, the underappreciated stuff. Don't mess with tech, but don't chase it either. Can you give me some details more about the stuff that you do like? I know you mentioned a few sectors before in the value camp. What about like the cyclical stuff? Does that work or no?
GNS, ready for you.
Well, some of the cyclical stuff's already reflected earnings appreciation. So, the Gs of the world have done very well. And so I do think you need to kind of be careful where you are. Well, you have cyclicals like a GM and a Delta that are still priced at single-digit multiples.
GME
So I think
4%.
those are good to kind of own. But I would look at more kind of the J&Js of the world, the Bristol Myers of the world, AESs of the world. Those are the type of companies that we like. And in tech, you can buy a GoDaddy that's a single-digit multiple as well. So there are definitely players out there, specific stocks. You just have to kind of make sure that you're buying the things that you understand.
All right. Well, if you're in BMY and AES, then you must feel confident you understand it because you're going against the grain. Those have been getting slammed all year.
You look at the fundamentals. Sometimes you just have to kind of hold your nose and say, hey, when the tide comes your way, things will do well.
Understood. So, Rod, great to have you here and looking forward to continuing the convo. Appreciate it.
Thank
you. You got it, Sarad Sethi, managing partner at Douglas C. Lane Associates. All right, coming up, let's talk some healthcare. We've been focused a lot on the weight loss drugs that have been making big news headlines. Don't forget about the market for diabetes, though. It's got a lot of competition as well, and Becta's right in the middle of it. We'll talk with the CEO when we come back next.
All right, about 40 minutes here. Barbecue down 4. Oh God, I don't know what's going on with it. It goes flat. Nothing's going on with it. At all-time lows. Got calls on it. Leaps. Alright, SPY, let's see what you got. A lot of action, a lot of movement can happen in the last hour. You can get crawl all day for the move to happen in the last 10 minutes. Given today's not been a crawl, it's been big range. All right, let's see if these lottos will pay. Let's see pre-market high. Yes, 450, 63. Do it. Reward me for holding.
Into that and how things been going here the last year, because the stock got hit pretty hard since last time we talked.
That's right. That's right. And you commented earlier about GLP drugs, and that's certainly been a focus in the investment community about what GLP drugs are going to do, not just to diabetes, but to other sectors that medtech companies are in. Look, for us, we are a young company. We spun off from Becton Dickinson a little over a year ago. We've been in this business making insulin injection devices for almost 100 years. And so what we've been focused on over the last, call it, year or so is doing a lot of the separation work so that we can stand up our own company as its own public entity, certainly maintaining stability of our base business. Our customer base is very diverse. Half of our revenue comes from outside the US. And so we've sort of managed through all the operating challenges that the world has faced over the last year and a half, inflation, supply chain snafus, what have you. But really, the other thing we've been focused on is, how do you inflect this company back to growth? Because the one thing I think most medtech investors look for is growth as they value companies. And we are very excited about a program that we have in development. It's an insulin patch pump. It's focused on type 2, which is largely an untapped market for pump delivery. That program is proceeding very well. It's being developed under the breakthrough device designation of the FDA. 1700%. And we look forward in the future to bringing that to market, because I think it'll open up an adjacent space for us, so we can actually span insulin delivery all the way
35
from
cents to $13.
syringes and pen needles, but also using pumps.
And what's the
timeline? You didn't even need to wait for barbecue. You could have done it on this one.
When do you expect commercialization there, Deb?
4,000%? Is that real?
Yeah, so we haven't really spoken publicly about timelines yet, Oliver. We've been really focused on getting the work done. The approach I've taken with both our internal team and certainly with the external community is saying, let's just get the work done, and then we can talk about it.
Up a little bit there.
These programs tend to be fairly complex. The review cycles are pretty intricate, as you would expect for a device like that. So we've been really focused on getting the work done. But I recognize that as we go through our fiscal 2024, we will have to provide a multi-year outlook for our company post 2024. I expect much of the separation work will be done. And as part of that outlook, certainly we'll be speaking more about timelines and what our outlook are for the patch pump.
Dev, earnings came in ahead of expectations. Revenue came in ahead of expectations. The bottom line in particular beat by a significant amount, 69 cents ahead of the 46 cents estimated by the street. Market really liked that. To your point, though, there's also been a very kind of strict focus in the last couple of weeks of news flow for some of the obesity drugs. But the market bottom line has liked your earnings since you reported. Where's the profitability beat coming from? Are you enhancing margins? Have the supply chain headwinds eased? Where's that coming from?
Yeah, so supply chain headwinds seem to have sequentially eased. I mean, year over year, inflation is still problematic for us. But if you will, as we've gone through our fiscal 2023, the year and over year headwind has sort of moderated. So that's a good thing. I think where the beat has primarily come from is just disciplined execution by our team, both on the top line as well as managing our expenses carefully. On the top line, we were able to grow. If you look at our base business, we were able to grow on a year-to-date basis as well. We have taken advantage of a competitor product shortage. That helps our top line as well. And so it's really driven by execution, pure execution by our team on a global basis, aided by the fact, as I mentioned, that inflation has been moderating sequentially.
Okay. So some of the inflation backdrop giving a little bit of support, some of this happening from your own execution. Is that something that's sustainable going forward? Is that a priority for you, enhancing that bottom line and margins, or is the priority the product and the growth on the revenue side?
Yeah, look, we will be investing in the company. There's no question, to get the top line growth growing again, right? We recognize that's a primary focus for investors, is how do we get the top line growing again? And so we will be investing back in the business, but we will be doing it prudently. The program, the patch pump program I talked about, I mean, is one where a significant portion of our R&D goes. We've spent almost 7% of our revenue in R&D, and a large part of it is behind the patch pump. We'll continue investments like that. There are some other investments we've made in e-commerce and digital marketing, what have you, that support our core business. So we'll
Calling
continue
a put for tomorrow.
Those investments, Oliver. But
450
one of the other
and a
things that I haven't
446.
mentioned about that we've been able to successfully execute on is being able to optimize pricing. And even for a product like ours, which you can say is fairly competitive, we've been able to take price, throughout the last 5 quarters that we've been independent. And certainly our efforts are to continue to do that. I would never want to sort of project what we'll be doing in any particular area with pricing or anything else in particular. But I do intend to keep sort of our performance on the trajectory.
In their hotel?
All right. Thanks for the explanation, Dev. I appreciate the update. Dev Kritikar, CEO at Impact EMBC, the ticker, hanging on to the gains from yesterday by a small margin. Still up, though, not down from the earnings. Coming up, we've got some options trades. Tom White says 2 bullish, 1 bearish. Someone chasing the energy trade, fading win ahead of earnings, and giving some love to one of the big consumer apparel winners. On.
I'm gonna milk those last minutes of theta on me. The grass felt nice. Bit of grounding. Recharged. Next up 5 1/4 today. There's still a chance. SNMP holding above VWAP up 37%. Might a little bounce, but hey. LPDV. It wasn't looking good earlier. Yeah. That's weird. Oh, because of the split. maybe. Party City's up 20%.
Several weeks. Traded about 2,500 the OC 145 strike calls. Average debit, they paid a hefty debit because there's some duration on this. They paid 810, so that break even of 153.10 over the next 72 days. That's only about 5.5% above the current share price in there. Call volume about 3 times normal daily average volume that we've seen over the last week. They did beat on earnings. They beat on EPS. They beat on revenue. They guided higher, of course, with the spike that we've seen in oil over the last month and a half, 2 months. So, yeah, a lot of positive vibes coming out of the oil sector, and MPC has just been on a tear.
Can we look at that one-year chart again?
Yeah.
I mean, this is like the chart. This is like the prototypical chart that people who are bearish like to put on Twitter and go, I'm sure it's nothing to see here. And then they put up this chart because it is pretty intense. And it's very unique in that the energy companies are not all doing this right now. But if it has any
look at that
indications of what's to come, then it's a really powerful statement about where crude oil prices are going. All right, not surprised to see some call buyers.
Another bounce on view up there.
Close to 90.
Nice.
So anything above 70 is considered overbought, but that is a parabolic move. And 16 out of the last 17 sessions positive.
Okay. All right, 2 other trades you got here. Probably the only chart that among these 2, you got on, and win. The chart that looks maybe as good, maybe a little bit more stable as on.
No, really LPTV wasn't looking good either. You mentioned it earlier today.
And Shoemaker, and it's not as ballistic as the marathon rally, but in some ways maybe it's a little healthier.
Lululemon finally has some competition.
Right.
And they started out in shoes. Lululemon tried to get into shoes. That's not working out that great for them.
Yeah,
that's a high-end athletic brand. On started out, or On Holdings started out as a shoe company, and now they're expanding more into athletic apparel. You see their stocks just off of 52-week highs, up 113% so far in 2023, Oliver. That's some pretty solid gains. They've got earnings next week, and I think that's going to be the catalyst and why we saw some unusual option activity. UBS just recently raised their price target to 46 from 42.
Let's get a 10-minute Fugazi up to the highs.
Will be solid. Survey work on customer acquisition has been pretty positive. Cowen had a positive note out on that. And as they expand their footprint into other items besides shoes, that should help their margins and expand their footprint here a little bit. And I don't know about you. Since I bought a pair of running shoes, I notice them everywhere now. I never noticed them until I had them.
They're all over.
Yeah, especially in my demographic.
Well, you got some cool loafers on down there.
I've got some loafers on. I'm dressed up, Oliver. Got to show.
Well, they don't have the dress category yet. However, they do have hiking shoes and boots. They have running for both the trail and the road. If it's not obvious, I'm on the website
got
right
some
now.
of their athletic apparel, shorts and shirts now. Also, so they're expanding
hiking
their lineup.
Boots. You know,
this is a company out of Switzerland. Of course, they got hiking boots.
People are really big on them. Almost they're like the gym version of like Crocs or something, because they're so unique looking with the little things underneath. I feel like when it catches on, it gets real hot.
Right.
And I feel like that's where they're at right now.
Yeah, it is, definitely. Just like wearing something Lululemon. Everybody wants that little horseshoe that they got showing.
I didn't even know it was a horseshoe. I just know it feels really good. I feel like for these, there's a little bit of the aesthetic kind of popularity element. You got a bullish trade. What is it?
Yeah, out in the August 18th. So they're going to capture that earnings event next week on the 15th. They bought 2,500 of 37 strike calls for $1.70 debit. So the break even for this trader at 38.70 over the next 9 days.
I traded Luke TV when it IPO'd.
About 5% higher. It's got an IV percentile rank of about 70%. So implied volatility really elevated going into this report. But somebody thinks that this rally that we've seen in 2023 is going to continue post-earnings on the 15th.
Revenue beat.
Last
EPS
trade, Wynn Resorts hit me. We know the story.
Barely beat on
China's
revenue.
Been sluggish. The data's been weak. Earnings tonight. Everybody else is going after the online gaming market. There's breakups, there's tie-ups.
EPS is negative 0.14 in
with
line.
Barstool out on
Probably
10.
some profit taking.
What's the trade?
They're buying some puts in there.
Excuse me. I don't see the Microsoft news. When was that?
Oh, really?
Option market's pricing in about a plus or minus 5.5% move in the shares post earnings, but they're in there buying the August 18th monthlies that expire in 9 days. The 90 strike puts, they only paid a debit of 30 cents because these things are far out of the money to the downside. So the break even for this trader setting up for some downside. I don't know. Are they protecting a long stock position? I don't know why you'd buy these.
5 below
that,
now. Wow.
Somebody thinking that we might see some disappointments today. That break even of 89.70 over the next week and a half, that's about 12% below the current share price. So that's more than a double standard deviation move that they need to the downside. It's not a pure earnings play because they're giving themselves another week post the earnings after the close today, with put volume about 6 times normal daily average volume that we've seen over the last 5 trading sessions. So yeah, somebody's setting up for some disappointment and win. It's had a decent year, up about 23%. So yeah, we'll see how Macau's doing with that economy kind of struggling still. Boston Encore doing really well.
Yeah. They're making a splash because, in the Northeast, there's not a lot of easy places to go.
No.
Maybe.
Play because Atlantic City's pretty hard to get to.
Yeah.
Unless you're willing to take a long bus. Thanks for the trades, Tom. Interesting. Fading win ahead of the report this afternoon. Coming up, let's talk about a company that you might have forgotten about, may not even realized ended up going public. It's WeWork. And, guess what? Its future is still in doubt. Shares which are trading below a quarter are down another 40%.
Wow. That's unusual for them to talk about a stock this cheap. We've looked at WeWork. The volume today, 118 million on that earnings. Seems like a pretty good value play. Maybe. $2 billion in the float. Wow. Well, glad I held the lottos. Glad I trimmed most of them up here. See what happens at that 50% retrace. BBIG doing? Down 16%. 30 cents now. Dang, that wrecked people. Wrecked me too.
They're wondering after the company that did raise concern, a substantial doubt about its future. Adding that another twist to a what has been a pretty negative journey, frankly, that the company has seen this rise, fall, the reinvention, and now the potential imminent collapse. So this company did warn its investors that it's facing losses, it's seeing fleeing clients, it has this substantial doubt about their ability to continue as a going concern, according to their second quarter report, which was also, as I'm sure no surprise to anyone, fairly negative. We did see they did lay out plans to improve their liquidity and profitability over the next year, but I mean, I think the move today speaks more to what we are seeing from this company in terms of its balance sheet and its overall financial health. It did plunge as much as 40% earlier today, so it's given back some of, or it's erased some of these losses, but again, it's still like down over 30%. The warning does, I'd say, then just continue to mark its pretty disastrous run as a publicly traded company. Shares have lost, like I said, over 90% of their value this year, beating down its market cap to around $105 million as of Wednesday afternoon. Its valuation at one time was $47 billion. But I think that just given the overall trends and right now the work environment that we're all becoming used to in this new normal, is anyone surprised that a company that's renting out office space is seeing this demise? I think outside of its turbulent past, outside of some of the mismanagement this company has dealt with, I mean, look around even at our office. It's not like we're seeing 100% capacity back. Even those of us who are returning to an office 5 days a week, I think this business model is seriously flawed. And right now we're seeing so many companies default on some of their leases. We're seeing office spaces that are completely vacant, and companies are trying to offload their overly ambitious offices space. So when you have a company like WeWork, I mean, your business model to me just makes no sense. I would be saying so far away from this stock, Oliver, it's not even funny.
Well, usually we don't dip into the penny category, but in this case, with the notoriety attached to it, the recognizability of what it went through, heck, it literally is a movie. We crashed, but it's still
nice coming down here. Wow, could have taken the short up there.
Office buildings that they're in
didn't have any buying power left for that, but
busy.
wow.
I mean, like, it's just the financials don't seem to make any sense for the company, so it does kind of bring up the question of what's going to go in there, and is that going to be a kind of another blow to commercial real estate? So it's a fair.
But are they busy? I mean, look at us. We're back in an office, and our office is still, I'd say, mostly empty.
And he settled down.
Right. Well, hey, we even lost our restaurant here.
I hear the pain behind that smile, Jenny. You can't fool us.
Charles Schwab, TD Ameritrade, a lot of other offices as well. I mean, the New York, when I was in New York, they're all over. And you see people going into them, and they're pretty busy. The one here in Chicago seems like people go in and out. But, yeah, I mean, just another potential blow to the real estate situation. So I feel like even though it's only 12 cents, it's still a story worth keeping track of. So thanks for the heads up. Jenny Horn, host.
Up 12% on the strangle.
Maybe WeWork is now last gen.
13.
Sure. Let's trade some energy with Dan Deming. He's a managing partner, KKM Financial. All right, so unless you're in the penny stock game, the real volatility and
look
excitement
at the SPY.
has been in
Not excited for CPI
like,
tomorrow.
Dan, what point do we, trade this thing either to chase stocks like Marathon breaking
I guess I could have left some
out,
buying power for the shorting. I did not expect this sell-off, though, to close. This is pretty fantastic.
Fade at your own peril, I think, right now, Oliver. We did break, we were in a range for several months until just recently when they finally did see the energy space break out, particularly WTI break out of that range. And now realizing some significant upside momentum. And with the steps that have been taken to limit supply and, some of the impact, I guess, the cumulative impact of that is starting to take hold. And, I continue to think that there's potentially further upside for the energy space, particularly when you look at WTI and to some degree natural gas as well.
So Natty here is kind of getting a story developing as well. Almost reminds me a
quite the
little
sell-off
bit
in
of
the
where
close.
we were a year ago, but maybe with some different causes, employment, some labor disputes. We were talking about Chevron's output from Australia earlier in the show, Dan. I mean, it feels like that's how important this subject is.
Yeah, absolutely. You're seeing some
Ready for some
challenges from a
volatility
global
tomorrow.
perspective, and the OPEC Plus adherence to their cuts is continuing to unfold. And even with China's disappointing data yesterday, particularly oil importation coming in much lower than anticipated, that really just had a very small impact on the overall trend in the market. And now we're getting back to focusing on supply from a global
100%.
perspective. And, we're seeing, the big draw last week in WTI offset a little bit this week by a build. But when you look at the general trends, and now it's being transferred into some of the other fuel areas where we're seeing some pretty sizable draws, I think the overall trend, Oliver, continues to be a restricted supply and demand maintaining or actually
if I can make my call free, I'm going to do it.
And that is a recipe for potentially higher prices, and certainly seeing it play out in WTI. It's moved today's breakout to the upside above 84 is, I think, nearly a 9-month high for WTI. And if you look at natural gas now pushing that $3 level at 296, that's a 5-month high. So you're seeing pretty strong performance across various parts of the energy space continuing to unfold.
Well said.
That almost looks like a CPI
link. And the dollar firms up. The fact that crude is rallying through it seems to add to the conviction of this rally. $85, almost there. I mean, there was so much range-bound trading in this. Any thoughts on kind of what could be possible here, Dan? Are we going to start seeing the sell-side reports out calling for $100 crude again?
Oh, I think so. Yeah, I think that's certainly in the cards, potentially, Oliver, with
the general trends in place. Just close out of the put side at Strangle. Made my call free, I guess. I'll just
even at these
play that
levels, it's still a significant increase in price, but the general trends are favorable, I think. And when you see kind of the dynamics in the market is suppliers, they've gotten burned several times over the last several cycles. It goes back to 2014, and then we did see another cycle in 2020. So they're cautious as far as just going out and, and say the fracking situation that unfolded years ago. That's labor intensive and costs very.
You can play the short side on the futures, I guess.
They got burned because of the fact of the matter is, Oliver, when you look at energy, when you go into exploration, when you go into production, things of that nature, that takes sometimes years to kind of unfold and kind of shift. So
10 minutes Fugazi, here it is.
Teams here, I think, have been in place for quite some time, and now we're starting to see the impact as demand maintains or possibly even increases, and supplies are being restricted right now.
Should close the rest of these up there, I guess. The break of this trend, but I was thinking maybe we get a handle in a rip, but this late in the day, like, you can't really call on formations. It's like a different type of algo that takes over. You have the buys and sells on close, and market makers hedging, and all sorts of crazy stuff going on. So patterns are kind of over. Anyways,
Mr. Kleintop coming up next. Nasdaq down 1%. So we've faded since the top of the show for sure. Bears giving it another whack here to see if we can go back to the lows.
Let's walk through how to analyze a company's financials on Thinkorswim. To get started, go
Low-C puts? What'd she get? Neg 6.3, 6.5%. Go. Go. Yeah, I could have even traded this short back down there. That's crazy. Since I'm doing a cash account, I was literally out of buying power though, so I was just diamond handing my calls till end of day if we got a handle and a bounce, kind of like yesterday. Yeah, I suppose if I had buying power to close them and maybe look for another, I don't know. That's crazy though, yeah, because I could have chased this one even back down. I did with a strangle, but that would have been the down, the up, and the down. I mean, it's set up here, you can see head and shoulders, like this was also the retrace for that cup. But I was done trading at that point, I guess. I was looking for the lotto. Fight the sell-off into close. Get that, still flushing down. The 5-minute finger slap. Yeah, 40% on Wii. Well, it's getting to be a bankrupt gamble lotto. I don't know what they were talking about. 140 million market cap. I'm seeing 264. Maybe they have a different size float than we do. We're making almost $1 billion a quarter in revenue. They are losing 200 million. The income's negative 264 million. What kind of debt they have? I've seen worse. All right. 3 minutes to close. I guess I just got that strangle. That's all I got on this account today. And then I closed the put. It was up 100%, so it paid for this call. Now I should have a free call for tomorrow, which I'll probably be closing it open. On the cash account, I might do a little small account challenge on it. Might start a video series. We'll see. I want to get some consistency first. Today was good though. It was like 33% on the whole account. So it was 40% at one point, but you know, lottos. So we'll see what we can do with that. Probably just straight day trading SPY dailies with it. Small losses, small loss days, letting runners run. Yesterday it would have been a pretty nice green day, maybe $100 if I didn't have to leave, because I would have just held through. on my calls. So that was good. But my loss was only like 30 bucks, so. And loss, I think the day before was maybe like 30. Small losses. And big winners. Market's kind though. This price action is very clean. So it's just on the days where it's not good for trading, mitigate those losses, and then just take advantage of the days where it's nice and clean. Don't force it. Don't force the bad days to be good days. Yeah, and then we did some data farm harvesting today, close some stuff out. Also planted some new stuff. Mostly just tried to close though, to reduce exposure for CPI tomorrow. GNS 17% up. That is neat. Dish came down a little bit. Still liking it a lot. There's market close. RAD closed down 10%. I think it still looks good. I do still like it. Decreasing volume on this consolidation. Looks good. So options are kind of weird. I've had an order out for options to fill, and this move didn't really move the options. Crazy. Let's see, 50% retrace would be 22.94 or 23. Might make it down there. Maybe 61.8. Wait. Other way. $61.8 would be $2 even. We'll see. It's a nice trend though. I like that one. GNS is up. Yeah. SNMP had a 28% move today. Yeah, jump on Discord, Publicious. Thank you guys for your support today. Thank you for your 34 likes. I appreciate it. Thanks, Bubba. Thanks, Guts. Thanks, Poison. Thanks, Shay from the Bay. You guys stuck it out. Well done. Thanks, MC. Pretty much just you guys in the end. Thanks, Cassidy. Thanks, CDB. Thank you. Spy's getting his bounce in after hours. Boing. See you on Discord. See you on Twitter. X. Thanks, Sneak. Play the week app. Might give it a little bit of time, see where it settles down. But it might be a fun little value play. I don't know. The earnings sounds pretty dire. But that's what you want if you want a big deep value, if it makes it. That is crazy what the market cap used to be on there. Was a crazy day. Alright, sounds good, Publicious. I might start streaming tomorrow morning a little early. For CPI, I'll probably just trade the futures. And I might stream that. Sometimes I just trade it and don't stream. But yeah, those come out at 8:30. Initial jobless claims, CPI, both come out at 8:30 tomorrow morning. So yeah, I might go for that. Thanks, guys. We'll see you on Discord. See you in the morning. Okay, peace out.